morning, everyone. It's the 25th of May, and we are bringing you this edition of InsureTalk from Cape Town live today. Well, what an exciting lineup we have, as always, but I think particularly relevant to where we find ourselves in our current conditions today. Our main sponsor for the event today is Munich Reinsurance. Munich Re is, of course, the biggest reinsurance company in the world, and we are grateful for your support for this event today, Munich Re. The theme for our conference today is Reinsurance Outlook in the Face of a Volatile Economy. What a powerful theme to have for us today, because we can absolutely all relate to that. Before we get into the speaker lineup for the day, I want to tell you a little bit about Munich Re, because we all know reinsurers are very, very important when it comes to making the insurance industry work as a whole. They step in when those big claims happen, and they help us move forward. But Munich Re actually sees themselves as experts in risk management, and they say their expertise is our strength as an industry. They take on risks worldwide of every type and complexity. The Munich Re Group and its business units are active in all lines of insurance. Their consistent risk management, financial stability, and client proximity make them a much sought-after, trusted business partner. And I really do want to comment on this, because at the moment we are still dealing with the impact of the potential national grid failure, and of course, load shedding as a whole on our portfolios across all lines of business, from corporate, commercial to personal lines. And I was privileged to recently attend an event where Munich Re took time to explain to us how the risk of national grid failure and municipal grid failure, we have now come to realize, can potentially impact on the insurance industry landscape. And they shared with us international test cases from the United States and other countries around the world. And they truly helped us understand this very severe risk that we are all facing as an industry in more clarity. So they do not just step in when we see the claims happen. They're also there to give us proactive risk management advice. So the team at Munich Re, we absolutely appreciate your support here today, and also that you are going to be sharing some of your wisdom with us. So our first speaker, we are very privileged to have here today. I am very excited about her specific topic, which is building financial resilience. Let's explore how reinsurance concepts could manage volatility. Pabalo Makupu is our speaker today, and I just want to tell you a little bit about her, because she has got an fascinating background. So she is a TED speaker. She is a published author, Wits and Oxford Business School Women in Leadership Delegate, and she was named Mail and Guardian Top 200 Young South African Women. When she's not cycling or creating content, she mentors future custodians of this industry. I love that she does that, because it's so important that we all give back to the youth of our industry, the future leaders. And she sits on the IIG Council, the ASSA Council, Member Engagement Board, as well as the Short-Term Insurance Committee. So we have a very, very well-rounded and experienced speaker to tell us about this complex topic. Thank you so much.
Good morning, everybody. I am really excited to be speaking to you today about a topic that I myself find to be quite interesting. And in terms of that, as we mentioned, we're really speaking about volatility and how some reinsurance concepts can assist in terms of being able to manage volatility. And in terms of today's agenda that I'll be speaking to, doing a bit of an introduction just to unpack where does this topic come from, because then we were faced with it a few months ago, especially given the hardening market, to see what causes volatility, especially within the profit and loss, and how can reinsurance be used to manage some of this volatility. The next topic that we'll be going into, or the next subheading, will be volatility within the insurance space, more specifically speaking to your underwriting margin and how reinsurance can assist with that. And then lastly, just deep diving into some reinsurance concepts that can assist in terms of managing volatility. So a few months ago, I came across a presentation by the Institute and Faculty of Actuaries, and the heading was quite interesting. And when I see anything that has to do with reinsurance, obviously I get excited. But in terms of this one, the title said, "Using Reinsurance to Control P&L Volatility." So obviously I got excited and really went into it to see what exactly are they talking about, and are there some concepts that we ourselves can replicate here within the South African market. When you think about reinsurance, we all think about, I guess, we have to pay a premium, so that reduces our premium. But then in terms of that, I guess the main point or the main purpose of reinsurance is being able to have some reinsurance recoveries when you do have a loss. And in terms of that, that's, I guess, the first part of reinsurance and the benefit that we see within reinsurance. The second part is just speaking to capital requirement. From a reinsurance perspective, the capital that you're required to hold is net of risk mitigation, and reinsurance is a source of risk mitigation. So with reinsurance, we understand that it reduces your capital requirement, hence improving on some of your solvency levels. But then the discussion was then about, but then what about profit and loss? How can reinsurance be used to manage the volatility within the profit and loss? So then the actuaries went about and started exploring to see how do we tackle this topic, and came across a survey that was called the Global Reinsurance and Risk Appetite Survey. This was in 2017, 2018, and three main themes came about. The first one was speaking to due to the pressure from investors, insurers are becoming less tolerant of missing earnings target. The second part speaks to reinsurance is used increasingly for earnings protection and volatility reduction. And then the third part was just speaking to managing volatility of underwriting results, and that it is of prime importance to insurers, and that reinsurance strategies measured by risk appetite is key to that. So these are the three main themes that started, I guess, this presentation that we'll be talking to today. Firstly, just speaking about from investor perspective, all reinsurers, our main aim, our main objective is to meet the need of all stakeholders, our employees, our policyholders, and I guess ourselves in terms of being able to make a profit. But when you start looking at it from a CFO, CRO focus, their main objective is really just thinking about the investors and how do we meet the expectations of investors. And usually this is through your earnings target. And when we speak about that second part, as I mentioned, this is what the presentation today is going to be about in terms of reinsurance and using that to manage volatility. And then the last part, which is also going to be part of this presentation, is just speaking about volatility within the underwriting results. Where does that come from? And then the other part of it is how do we use reinsurance as a strategy to be able to manage some of that volatility. So moving on from 2018, what has happened since then? The first one, I guess, the most devastating one of all is COVID-19. And when you look at this picture over here, it's really essential to also think about it from a line of business perspective. Yes, we do have COVID, but then when thinking about it from a motor perspective, there was a lot of benefit in terms of reduced frequency. On the other side, when you think about it from a property line of business, there was the business interruption claims that we all faced with, and the other part was the riots that we faced in 2021. And in terms of this also speaks more to like your political riots, strikes, and terrorism. So again, think about it from a line of business perspective. And then 2022, I guess the KZN floods, which were devastating, not necessarily from a line of business perspective. We have to think about it from a infrastructure perspective, insurance perspective. But then more than anything else, we really need to think about the lives that were lost due to these KZN floods. So these three events has been what has happened since the survey that I discussed earlier. But then above and beyond all of these events, there are smaller events that have happened that don't necessarily speak to your CAT events, but speak more to the attritional losses that we're seeing. We have inflation that is on the rise. We have fraudulent claims, given our current economy, that are also on the rise. We have the change in the IFRS standard, which from a P&L perspective brings in a lot more complexity and volatility within our financials, in addition to some of these CAT events that we're seeing. And the main aim, I guess, for the change in the IFRS standard was to make our financials more comparable. So the one part, when we speak about investors, we're not necessarily just competing amongst ourselves for investment, but now have to compete with other industries as well. The second thing about the change in the IFRS standard is that when you make a loss, you have to recognize it immediately. However, when you make a profit, this needs to be recognized over time. So there's a bit of a mismatch there. So when you make a profit, it gets recognized over time. But however, when you do make a loss, this only gets recognized immediately. So in terms of that, it has a few implications in terms of how you show your profit or your net profit at the end of the day. And then in addition to that, it does have a knock-on impact on your tax as well. And the main difference, or the main change as well, is that now your losses or your reserves need to be shown on a best estimate basis. So in terms of that, you're releasing some of the prudency within the reserves. And then in terms of that, again, there'll be some once-off profit that you start recognizing on your balance sheet, which from there will have knock-on impacts on your tax. So this is a lot of some volatility that we need to consider when you speak about the IFRS standard. And then again, one of the topics that we don't necessarily enjoy talking about is load shedding, but then in terms of that, it does have a significant impact and volatility on our business. So again, going to that reinsurance, global reinsurance and risk appetite survey, something that I would like to explore with you today is those underwriting results. How do we deep dive into these underwriting results, understand how it's calculated, and then understand how can reinsurance concepts help in terms of managing some of this volatility. So in terms of the underwriting result, it requires, I guess, simplified version, 4 main concepts or 4 main inputs. The first one we need is your premiums. The second input would be your incurred claims. Third one is your acquisition cost, and the last one will be your expenses. So you take your earned premiums, less your claims, less your acquisition costs and expenses, and then that will give you your underwriting results. Once we include investment income, that's when you start talking about it from a profit before tax, and then allowing for tax, then that's your ultimate profit post-tax. And to put some numbers into it, I have an example over here that we can look into just to have that recap of how the underwriting results are calculated. So the first part, as I mentioned, you need your premium, you need to incur claims, acquisition costs, as well as expenses. And then in terms of that, you just take your earned premium, that is that 2 billion, less your incurred claims, 1.5 billion. So assuming that your loss ratio is sitting around 75%, less your acquisition costs, less your expenses, and then ultimately your underwriting results will be sitting at around 20 million again. Premium, yes, incurred claims, acquisition costs, and expenses. So the question for today, okay, now we understand how these net underwriting results are calculated. But then the question now becomes, where does reinsurance fit in? So from a reinsurance perspective, it fits in 2 main buckets. The first one will be your profit before tax, that is on our left-hand side. And in terms of that, from a reinsurance perspective, as I mentioned, yes, you do pay premiums, but then the benefit comes through when the losses start to occur. So then in terms of that, there's some reinsurance recoveries that you would make. And then in addition to that, if you do have a proportional structure, there is some commission that you get there that will improve your own funds, and then reducing your capital requirement, ultimately improving that solvency capital requirement ratio. So this is where the solvency and capital part fits in. The second part on your right side, that is when we have these incurred claims. So from a reinsurance perspective, it assists your incurred claims in 2 ways. Firstly, when you have a loss, that is your reinsurance recoveries, that sits in your underwriting risk. And then the second part is speaking more from a reserve risk. How did these losses develop over time, and how can you use reinsurance to manage some of these adverse developments that you wouldn't necessarily want? So in terms of this presentation, that is going to be our main focus for today, to see how does reinsurance assist in terms of managing your underwriting as well as your reserve risk, and then how can this be used to manage your volatility. So we can go into a few illustrations. So over here, we have a bit of a dummy example that I created with some assumptions, assuming probably this is a property line of business. So from 2017, we probably had a spike, assuming that these are the knives and the fires that we are faced with. 2020, assuming that this is COVID, there's also a bit of that the spike that we see there. 2021, maybe some reserve releases, and then 2022, we're seeing some KZN floods. So in terms of this, again, this is a bit of a illustrative example just to see that there is some volatility that we're seeing within our incurred claims. And then again, how do we start using concepts such as your reinsurance concepts to manage this volatility? First and foremost, when you do speak about reinsurance, I often say that some of the best solutions are often the simplest. And with the simplest of solutions, we speak to your traditional solutions, your proportional, non-proportional type of solutions, because these are simple enough to be able to meet some of the client needs, be it volatility or whatever the need may be. And more often than not, these work, so then problem solved. However, if they do not work, there is probably a matter of looking historically, what are some of the solutions or structured solutions that have worked in the past, and then how do you start using this to protect your volatility going forward. And then if this doesn't work, I think that's when we really start speaking about how do we have a bit of a data analytics workshops, deep dive into the numbers, and then assist you to break down where is, I guess, the need, and how do we start coming up with solutions that assist in terms of this need. And with that, if we do have a workshop, it's usually with myself, some of the underwriters, and then some of our experts that sit within capital partners. The first thing that we would want to do is to act as a second pair of eyes. And with this, what I mean is that from an insurer's perspective, you do have, I guess, your underwriters, your actual team, your reserving team, and they often do a lot of scenario analysis in terms of where's our book sitting, what are the scenarios that we can shock to see if there is a different outcome, and then what are some of these risk mitigation, and then post-risk mitigation, what is our own risk and solvency assessment looking like. And then from our side, we'd probably do a bit of a similar analysis using our own models and the data that you provide us with. And with that outcome, it's so simple that you really just take your analysis, take our analysis, and then simply take it to the board and say, this is what we've done. We've had a second pair of eyes look into it, and then we are either on the right track or there is some tweaks that we would need to do. And if there is a few tweaks that are required, it's a matter of looking into it from I guess, what are the bespoke structured solutions that we can start looking into. And with these, it's a matter of, if you look here in the middle, that circle over here, when we speak about bespoke, we speak about what is your need, what are you looking for, what type of solutions would you like. And most of the solutions or the motivations that we've seen, majority of them, almost a quarter of them, speak to solvency again. As we mentioned at the beginning of the discussion, the main need for reinsurance will be that solvency part, reducing your capital requirement and then improving your solvency level. And then the second biggest share of the pie would be your disaster management. When you speak about it from a catastrophe point of view, that's some of the benefits from a reinsurance perspective. And then the third biggest part of the pie is an additional source of capacity. So in terms of that, it probably speaks to when you're thinking about it from a merger and acquisitions point of view, when you're thinking about expansions, how do you use reinsurance to free up some of that trapped capital that you can start using in terms of building and expanding your business. And just to start off, as I mentioned, the best solutions are often the simplest. And the first concept that I really like to discuss with you today speaks to your proportional solutions. So in terms of this, we're just doing a simple example to say that it's a 50-50% quota share. So in terms of this, your premiums will be split 50-50, your losses will be split 50-50, and then that last block over there, as you can see, there's probably some event limit where I guess whatever spills over would either be retained internally, or this is what will start going into some of your proportional structures. So in terms of this, what does a proportional solution do to your underwriting results? So as you can see over here, this the blue part is that original graph that we looked into in terms of some of these incurred losses. And then the green part will be the impact that a proportional structure will have on your underwriting results. And with this, as well as other solutions, there's always going to be a few pros and cons. Hence, we really need to understand what is the motivation and what is your need at the end of the day. So if you look at this, it doesn't necessarily reduce those peak losses that we see there. But then from an absolute amount perspective, you can see that instead of having your losses set at a certain amount, with a proportional structure, it reduces that amount that you need to pay. And then in terms of that, reduces your volatility in absolute amounts, but not necessarily in percentage amounts. So that is the pros and the cons with a proportional structure. And I guess with any proportional structure, there is some PC that you get, which can increase your own funds. And if there's pros or cons in a proportional structure, let's look at a non-proportional solutions. And with this, just probably understanding then, does it meet the cons of a proportional structure or not? So high level on a non-proportional structure, you have your loss, the first graph on the left from ground up. And then in terms of that, from a reinsurance perspective, you have your priority and your limit, which can be several layers sitting in between that priority and limit. And then from there, the lower blue portion, that's what you would retain, that's below the priority. And then the losses that are in excess of your priority, that is what the reinsurer will pick up. And in terms of this, then again, going back to what is the problem that we are trying to solve today. And the problem is, how do we manage that volatility within our incurred claims? So in terms of this, you can see that those peak losses from 2017, 2020, as well as 2021, they are quite significantly reduced with this proportional structure. So I guess those are the pros. However, you also need to understand that I guess in the other years, we were not necessarily seeing these peak losses. There are some premiums that you would need to pay. And in terms of that, I guess it's not necessarily a matter of you're getting the benefit in those years, given that there is some premium and some expenses that you need to pay off. So again, some pros and some pros and cons, and then ultimately speaking to what is the need at the end of the day. Are you looking for a solution that speaks to these peak losses, or are you looking for a solution that speaks to the absolute amount in terms of the loss amount? And then that would speak more to your proportional structures. But then I've been mentioning, I guess, there is a few pros and cons to every solution. So with structured solution, it probably speaks to that. How do we probably do a combination of solutions to see what best meets your needs, and being able to, I guess, look at it from both sides and coming up with a structured solution that meets your needs and probably is also helpful in terms of being able to manage some of that risk appetite that you are faced with. And when we speak about these structured solutions, there's quite a few motivations that we need to look into. And today we have been speaking more towards that disaster risk management, because we mentioned there is some volatility that has been caused by, I guess, some catastrophes. But then with reinsurance, there's quite a few benefits that we can speak to in terms of business growth and expansion, being able to avoid negative movements of planned events. This probably speaks to the survey that we looked at earlier in terms of how do you make sure that you meet some of the expectations of your investors, earnings smoothing and stabilizing of results. Going back to solvency and capital relief, how do you make sure that you ensure that there's dividend protection? How do you use reinsurance in terms of being able to free up some additional capital? These next two blocks speak more to the reserve risk part of it in terms of how do you discontinue a book or business. Can it even be how do you discontinue a line of business? And then speaking about mergers and acquisitions, this is when we probably start speaking about some of these retrospective type of solutions. And then the last block there at the bottom speaks to business planning. And I guess probably with this picture, it says a lot. So I'd really like to break it down a bit and then speak to how do we illustrate how this process and how we, from a reinsurance perspective, look into it. So I usually look at it in three main buckets or three main blocks. And the first one is a trigger. So what is the client's need? Somewhat speaks to this previous slide that we have over here. It can be that, say that a client, you as a client would need some business protection. So for me, that will be the trigger of you coming to speak to us. The second part is the action. So what happens now after you've noted that you have a need or you need to meet a certain KPI? So what happens then? And then the other part is the outcome. What is the result that comes out of it at the end of the day? So what is the trigger, the action, and then finally, what is the result? And you're probably here today because you want to know, but then what if you want a different outcome or different result? And in terms of that, you take a different action. And so in terms of that, you have your client needs or your client trigger. If you want a different outcome, it's a matter of what is an action that you can take that is different from, I guess, what you would normally do, take out a structured solution. And then in terms of that, be able to get a different outcome. And in terms of what we do in terms of the FinRe space or these structured solutions, we somewhat want to try and secure that end result. How do you make sure that you meet your motivation, whether your motivation is disaster risk management, whether your motivation is solvency and capital, whether your motivation is to expand and ensure stability within your book of business. That is what we try to do in terms of these bespoke structured solution. And over here, if we go into, I guess, a specific example, you can see that in terms of this flowchart, is not necessarily the neatest, but then ultimately, as I mentioned, what action would we need to take to somewhat secure the end result? So in terms of that, we have a client need. So from this case study over here, the client might approach us and mention that they would like to somewhat manage that volatility within a certain range due to, I guess, investor pressure or investor need, or due to their own internal KPIs. The first action would be that they are faced with a major loss, and then the outcome could be that you're not necessarily meeting the smoothing of these KPIs. Scenario number two would be that a client has a need. They come to us and take out a structured solution. We can do probably a combined multi-year type of solution where you speak to your proportional as well as your non-proportional need. Then if you go back, then there is a large loss. And instead of the outcome being that you're not able to meet your KPIs, the outcome could be that you cede a portion of your business. The outcome could be that you have more stable loss ratios due to having that structured solution, stable return on equity, or stable dividends. So again, it's a matter of what is, I guess, the need that you have in terms of these solutions. You either probably retain it internally and then have a certain outcome, or you somewhat try and secure or meet your ultimate motivation, and then through that work backwards to determine what is the action that I would need to take, or what is that reinsurance structure that I can put in place to be able to meet this ultimate result. If we look at it from a different need, Over here, we might have a client that's looking to expand. And in terms of that, the first action that you can take is that you retain some of this volatility on your book of business. And then the outcome is that there is, I guess, a bit of volatility and then unstable investor returns. Or alternatively, you can say that at the end of the day, our main need or our main motivation would be to ensure that we spread out some of this new business strain and maintain stable growth. Working backwards would be then what is that structured solution that we would need to take out. Again, it can be as simple as a proportional treaty or non-proportional treaty, or we can even do a combination of both proportional as well as non-proportional treaty. And then in terms of that, the main aim or the main objective is to make sure that you meet a certain outcome. So in terms of this, quite simple in terms of how we think about it, and it's a matter of what is the trigger or the client need. The second part, what is the action that would need to be taken, and then lastly, what is the result or output that you'd want to meet. And I guess in terms of that, from a reinsurance perspective, as I mentioned, it all really determines what is your ultimate need or ultimate motivation. Most of these solutions are tailor-made to whatever need that you have. Is not necessarily just a plug and play. And with volatility, it's probably the same. It's not necessarily the same losses that are going to be giving you those peak losses, or it's not necessarily the same experience that's going to be bringing that volatility within your underwriting results. And it's a matter of being able to sit down and go through the data and understand what are the losses or the events that you are concerned about, what are the issues or the KPIs that you would want to meet, and then how do you actually work towards meeting those specific needs with the structure that best suits your need or the best suits your motivation. And in terms of that, the best way that I often like to think about it again is thinking about it, what is the end result or the motivation? I want solvency capital relief. Working backwards, what is the action that you need to take? Well, probably a multi-year NQS for the excess of loss to manage, I guess, both the absolute losses as well as the peak losses. And then whatever trigger comes through, you're somewhat sure that you're able to maintain your motivation that you would want to achieve at the end. And that is my presentation. Thank you so much. And if you do have any questions, please put them in the Q&A box, and then I'll be happy to respond to your questions. And then you do have my emails if you'd like to reach out and discuss further. Thank you.
Kobalo, thank you so much for that fantastic presentation. Definitely more risk aware after your talk this morning, but we appreciate you sharing your wisdom and knowledge with us. And again, thank you to the Munich Re team for making you available as a speaker today and for being our headline event sponsor for the day. Our next speaker, Colin Eels, is going to talk to us about the power of purpose. We often hear these sort of topics being thrown around, but Colin is an expert on the topic. He sees himself as a curator of thought leadership events that help you develop teams, leads, relationships, and ideas. And he says actually his whole business is built around this idea that thought leadership can help executives develop new relationships, which in turn open up new opportunities. And I think, this combined topic of purpose, building a network, building relationships, and using all of that to develop your own business and your market is something that I am fascinated by. I'm also part on my own startup journey. So I really look forward to your talk, Colin. So over to you.
Lovely. Thank you very much. Hopefully you're hearing okay. I'm sure you'll tell me if you can't. And thank you very much for inviting me. I'm just going to get straight into this. I'm just going to crack on. If you've got questions, please leave them in the chat. I'll try to answer. But obviously, if you put them in the Q&A, it's going to be a lot more likely that I'm actually going to see them. We've only got a limited amount of time. Power of purpose. Let's just kick off. By the way, That last presentation was fascinating in terms of the, the specific aspects of, actually dealing with clients. This is coming from a very emotional perspective. If that was kind of mathematical or mechanical, which you've got to do in the insurance sector, this is very much built around emotion. Okay. And the theory that I've got is that purposeful organizations are going to outperform their profit-driven peers. Okay. Just think about that for a minute. Think about what it is that your companies have set as your strategic goals. And then maybe think about companies in the world, could be in South Africa, that you actually admire, that you respect, and ask yourself, what are they trying to achieve? And in simple terms, do you get the feeling that the companies that you love most are the ones that are really trying to go for profit, to be the biggest and the best? Or are they actually the ones that are sitting there and trying to solve some fundamental problem for their customer base? So use yourself as an example to get into this topic. Let's just think about it. So I don't know what your purpose is. Have a think about what your purpose could be. But if I was a company, then potentially I would have a purpose a little bit like this. I don't care what's put on the marketing or the websites that's out there. Most people sitting in an exco level working for a board have got 1, 2, 3, 4 of these types of statements, at least in their mind. Okay. And so for me as a consultant or a thought leader or someone that's trying to inspire others to go and change, actually what I would really be talking about, especially if I was a listed entity with a shareholder structure behind me, is how do I maximize my profits? How do I improve my efficiency? How am I going to be the biggest consultant that I could ever be, and the best, and all those types of things? This is consistent in what you see. And you'll know this if this is in your organizations, because it will trickle through in a lot of the systems and structures that guide how you work on a day-to-day basis. Think about your personal development plans. Think about whether you use a balanced scorecard. Think about whether you're using KPIs to go and drive your actions and tasks. And often what you'll find is that in those types of structures which are profit focused, you will have requirements in there around minimizing costs, improving efficiency, driving revenue, uplifting whatever it is that you're doing by X% and playing your part in it. But I want to pose a question to you about that. Just imagine yourself and you're going on your own voyage of discovery. If I said to you, how could you actually think of ways to go and become a billionaire? Come up with a method that you could do this, all right? Write that down and have a little think about it. If you do get a really good answer, by the way, please put it back in the chat because I want to go and copy it. And the best answer I've ever had on that particular question is probably the only way to become a billionaire, actually just offhand, is to become a politician. But aside from that, I think it's a really difficult question. And so when companies are saying, how do you go and uplift your profit and that's your purpose? I think that's really difficult. You've got so much choice, it's quite difficult. What happens if you turn it around though and say, how do you save or improve the lives of 1 billion people? How do you improve educational standards for 1 billion people? How do you reduce sexism across the globe? How do you improve opportunities for people that have been disadvantaged? These are purposeful questions, and I think it's a lot easier if you take those to come up with ideas. I'm sure if we ran that as a poll, you'd be able to come up with 10, 15, 20 different ideas for each of those relatively quickly. So this idea of maximizing profits, to me, is the wrong question for companies. You've got to go and see this as an outcome. It's a second order derivative. It's what comes after you've actually delivered on something beforehand. And nowadays, of course, we've got this twist where companies are starting to go and actually just add this, do it in an ethical way sort of thing. It's not convincing for me that most companies are actually putting ethics and doing the right thing at the heart of what they're actually trying to achieve, especially in older organizations. So if I was going to go and reset my non-ethical and potentially old-fashioned type of purpose statement about driving profits, I'd want to do something like this. This is what I would like to be thought of as in the community, as someone who's trying to inspire purposeful change. And I think when you as a company, as an individual, you set a purpose which is a bit more emotional, you start to get some really interesting benefits. And I guess these are the arguments that are going to start to go and form your opinions about whether it's something that you can implement in your organization if you don't have it already. But in simple terms, everyone loves a purposeful leader. If you're going to get a mass or a tribe or a grouping to follow you, which is what your role is as a leader, to go and support you in terms of this outcome, this strategy that you're trying to achieve, then they're going to love you and be buying into it a lot more if there's something which they can emotionally resonate with and get behind. And it's not just simply, we're going to go and make lots of money. So I think there's 4 or 5 examples or stakeholder sets where this can particularly resonate with. I'm just going to use these examples. The first, many of you might know, is TransferWise. I love TransferWise. Their purpose is so strong. They want to essentially allow you to do FX cross-border without any fees. And that sets the trend in everything that they do. When you go actually on their website, they're so certain about this goal of theirs, they actually show how they are against the competitor prices. It's not perfect, but how many companies are willing to go and show their competitors, their clients, that actually they're not first for US dollar rand at the moment. It might be that you should be using Bank of Scotland. I think that having that purpose, though, gets their customers to become their ambassadors. And I'm doing that now because I'm recommending TransferWise simply because I love their experience. Well, that's one part of it, but actually it's their underlying purpose that really gets me excited. And it's not lipstick on a pig. It's something they are genuinely doing. I had an email from them just the other day, which gave me a refund because they've actually worked out how to go and pay people back. I don't know what it works out, an FX hedge, which has given them a bit of a benefit. How cool is that to not give that to their shareholders, but actually to give it back to their customers? I want to be their advocate. Have a look at the investor side of things and read this, okay? Investors are obviously critical. As regular readers of this letter will know, our energy comes from the desire to impress customers rather than the zeal to be competitors. If you don't know where that came from, then don't be surprised that it's Amazon. It was from Bezos. It's one of his shareholder letters. Now, what I find interesting about a lot of companies that are very purposeful is that they're essentially able to get their investors to buy into their journey, which gives them access to capital at a far cheaper rate. If you're setting yourself up as a growth stock and you're telling people to invest in my company because I want you to believe in the vision and the purpose of what we're doing, you're able to go and reduce the obligation to go and pay out large amounts of dividends. People get in and go and support it. So Amazon has essentially been scaling over the last 15, 20 years by having a zero cost of capital. That's just not feasible for other companies that are promising to their shareholders dividend and they're focused on a profit motive for people to invest into them. To do that, obviously, you've got to be quite strong. Bezos has turned around both on public channels in his official statements to his shareholders and says, if you're just a day trader, if you're going to go and be an algorithm-based shareholder, really not interested in you being part of what we're doing, really not interested at all. You come to us because you're going to see the value of going into the most customer-centric platform in the world, and you realize that we're going to take every free working cash flow to reinvest into the business. We're not interested in you if you haven't got that joint goal that we have. So customers love you, and that's the Amazon share price. Interestingly, their net income until recently has basically been zero, and yet still they've got that incredible value because people are buying into that vision. Think about the staff now. Staff is really interesting as well. I think companies that are trying to go and pay people to join them and they're just being clear about the responsibilities are a massive disadvantage. This is an example from, I don't know, JIK, where it's a real advert that was in a newspaper somewhere: establish, develop and maintain. It's telling you what the job is going to be involving, effectively marketing for a really boring cleaning product, JIK, okay? If I'm sitting there and I've got the skill set to go and look at this, I've got absolutely no interest in joining that company, right? This would be the last choice if I couldn't get into anything else and I've got nothing else which I can actually go and do. Now you go and compare that to, say, Unilever. Unilever is a great company, right? What they're doing is they're saying this isn't about going in. So Simran here, who's the global brand manager, this isn't going in and saying about the role and what you can do. When they're putting their adverts out for staff, they're going to their underlying purpose. We want to go and effectively help improve sanitation across the globe. We want to go and work out ways to go and get millions of people to move away by washing their hands, by cleaning their clothes, by cleaning their kitchens, whatever it is, from dysentery and diarrhea. They had huge success over the years by setting their purpose about uplifting communities, okay, as opposed to selling products and services. If you're in brand management, do you want to be in this example, or do you just want to be simply selling more items of Jif or the Domestos type equivalent? And if you go onto any of the social channels, you know, LinkedIn or Facebook in particular, when they put job adverts out, it's no surprise that you see thousands and thousands of people wanting to go and join these types of companies. I also think if you do it well, if you are purpose driven and it's coming through in how the leadership team is operating, you're able to get incredible staff, but also get them at decent rates. I'm not saying you have to go, 25% below market rate, but you're certainly not having to go and pay 25% on top of market rate because you've got people that want to be part of whatever your mission is. Another example of that, obviously everyone recognizes this guy, Steve Jobs. Do you want to sell sugary water all your life, or do you want to come and change the world? So that was what he used to encourage John Scully, the then CFO of PepsiCo, massive organization compared to the size of Apple at the time, to come across, take a huge pay cut, and actually join their little adventure. Interestingly, it didn't work out in the end. He wasn't the best CFO they've ever had, or the CEO that he came in to be, but that came later on. Two last things. Have a look at this. This is Audi. People don't talk about this very much, but a key aspect of a business success is your supplier relationships. It's really interesting for me as a small SME where I'm going and dealing with large organizations. Their ability to pay me is flawed with the paperwork that you have to go through, let's just be honest about it, the ridiculous bureaucracy that's being put in place is an absolute nightmare. And then when you actually do go through that kind of goo of paperwork and eventually you start invoicing, invoices from that time of doing the work to the first invoice, to the purchase order being created, to eventually getting it into the system, to the release actually happening, can take anywhere between 90 to 120 days, which is absolutely ridiculous. Absolutely ridiculous. When I go and look at banks, for example, the fact that they could probably give me a loan for a similar amount on the same day within an hour, because that's where their focus is, but it's going to take them 90 days to pay me for work, just doesn't make any sense. Now, we don't talk about it much because suppliers tend not to go and berate their customers, but there is an impact there. Audi, for example, are able to go and get first-class supplier service deliveries on time, great relationships. They're a very simple supermarket model in terms of quality goods at cheap rates, without branding being a predominant part of their marketing model, based initially in Germany, and they're now going global. But what they do is they try really tight margins with their suppliers, okay? And there is no differentiation, yet they come out first. The fact that they're just telling their suppliers, we're not going to give you much margin and we're only paying you at 90 days, at least it's clear. And they've been honest about it, because their goal as Audi is to go and offer these quality products at good prices. And so the suppliers get it and they can accept it. And they have a relationship, they vote them up. Audi doesn't run out typically of products and services on the shelving. They've got their management and support from their suppliers pretty well set up. Then the last one is about partnerships. I think everyone here is going to recognize those two brands. I've got Discovery. Many of you are probably working within Discovery, and we've got Easy Equities there. Okay, I'm going to talk about Easy Equities because I think what Charles Savage and his team have done over the last 5 or 6 is phenomenal. They're the biggest broker in Africa. They've now got over 1 million customers. Okay, this is from a startup which I still think has only got about 130, 140 people. How have they managed to get there? They were clear about their purpose. Their starting point is they want to democratize access to stocks and shares. They want to find a model where people can invest no matter what income bracket that they've been in. So they've had to be super focused in developing products and services which fulfill that purpose. Okay. Now, when they've got bigger and they've been successful, it makes absolute sense that they can start to go and network and connect with other similarly purposeful organizations. They've talked to many of the other banks, and I'm sure they've talked to a lot of the other insurance companies as well. I don't think it's luck that has ended up, or happenstance that it's ended up being Discovery and Capitec who are their chosen partners, at least for now. And I'll come back to those two examples in a wee bit. So what's the evidence? Okay, there's obviously this kind of like, isn't this obvious what we're talking about? I don't know, maybe you've got some different views. For me, it feels very obvious. It feels very intuitive. I know when I was working in large corporates, I always enjoyed projects and managers that were driving me in and getting my excitement up in terms of driven by purpose rather than pointless KPIs. But there's also plenty of evidence out there as now. You can just look at the share price and stock prices of many of these purposeful organizations. Unilever, improving sustainability for 1 billion people globally. Okay, what have we got next? Discovery, looking to help people to live longer and healthier. Capitec, offering simple, affordable and accessible banking products, and they've stuck to that. And there's a lovely little example from Capitec from a few years ago when I was chatting to their then CEO and saying, why haven't you done until now a funeral product? Because we couldn't work out a way to go and do it in a simple and affordable and accessible way. A year later, you've now done it. Why did you decide to do it? Well, we've worked out how to do it in a simple, affordable and accessible way. So when you are clear about your purpose, the other interesting thing is it kind of starts to become a key part of your discussions and what you should do, where you set your objectives, what the key strategies, are. If you're sitting in Discovery, if you ever had one of the senior meetings there with Adrian Gore, you'll often find him starting off with a restatement of what the purpose is, or going into that first and trying to assess whether the idea that's been presented to him is going to align. And that's, I think, one of the reasons why it took so long for them to get comfortable that they could actually do something with a banking product to go and start worrying about your financial health. And the evidence is mounting. That's just an article from the FT. We can go on and we can have a look at some other reports, Forbes. I think if you look at most major channels, you're starting to see support from this idea I'm presenting on, and even big organizations like BlackRock, one of the biggest asset managers, I think the biggest asset manager in the world, are starting to be a lot more forceful that they're going to disinvest from companies which are causing negative externalities. And they're starting to really focus their attention on companies that are a lot more purposeful and a lot more driven by issues around or improving things around sustainability, for example. What happens when you get it wrong? Well, that could be a lot of companies that have got it wrong. I don't know if you'll recognize either of these two statements. This group's strategic focus is to strengthen its position as a global leader, supporting its brands to be the number 1 or 2 retailer. So a classic example of wanting to be big and the best. I don't know if you can remember who this one was. Steinhoff. So I'm not saying that just having a negative purpose is going to lead to fraud and corruption, but certainly I do have the view that if you're setting a genuine purpose, it's less likely that you're going to have poor performance and behavior at that senior leadership level. It's less likely, I think, you end up with that Enron type scenario. Then a more recent example, we build lasting value by serving our clients with care and entrepreneurial spirit. I'm deliberately not choosing any of the organizations that you guys might work for, right? Now, nothing wrong with it, except it's vague, it's irrelevant. I don't know what they're doing. It doesn't tell me anything. It's kind of, these are, you'd expect every company to do this, in all honesty, right? Why aren't you just treating your customers? I mean, these are table stakes. There's nothing exciting. I don't know what these guys do. And the market agreed. They also thought that they didn't know what these guys do, and hence Credit Suisse went down and UBS ended up taking over. The best purpose of all, just as a kind of a finishing point, and then any questions we can go and run through. What is the best purpose of all? I've already said, it's something which I think emotionally resonates. I'll use an example from your industry. Let's use Lemonade, for example, in the United States. They're a very purposeful organization. They're sitting there and they're saying, the insurance industry is broken and we're here to fix it. And they've started to go on that journey. So they're looking for instant payments on claims, instant onboarding, algorithm-driven intent, and building communities, because their payback offer is absolutely sensational. They say it's broken because we can't ever work out as a company whether we should be paying our shareholders or looking after our customers. If we improve premiums, it's better for shareholders, but we want to go and reduce the premiums. So they've effectively said that they're going to maximize their profit at a set ceiling, 12, 15%, I forget the exact number, and anything that they earn beyond that is either going back into the charities that they're supporting with their customers or directly into reduced premiums for their customers. It's a brilliant model, and they get massive amounts of support and attention, and they've got a huge user base because of that purpose which they've set. So the best purpose of all for me, if you take that as an example, or any of the others, for example, is one where you can imagine this as your epitaph. You're going to be sitting there as you're old and grey before you're about to go and pass away, talking to your children. They say, Granddad, Grandma, what was it that you did in your life that you're particularly proud of? Well, during my working life, I've tried to uplift people. I've tried to improve communities. I've tried to go and help people with products and services that make lives better. And I think if you get to a point where you're doing something, whether it's your project, it's within your team, your department, or even the whole of the company, if you're running it, where you can genuinely turn around and tell people you've tried to do good, and from that you've been able to benefit by making money, you're probably in the right direction in terms of what it is that you need to be doing for a purposeful standpoint. If you want more case studies for that, you can obviously go onto my website. And if you want to go and connect, there's a QR code where you can find my LinkedIn details. So that was that. I'm just seeing if there's any questions, and if there are any things that you want to go through, pop it down on the chat. And if you want to continue this discussion in any other way, obviously just let me know. So, no questions. We've got one. We can't serve everyone, therefore, should you be selective with your clients? I think that's a great question. Guys who are organising the call, please kick me off when I go over my time, but I'll answer that one. I think it's a great question. you absolutely have to be, and this is such a thing that, I struggle with this. You have to be incredibly focused on who your clients are. Okay. You cannot set out as a purpose. You shouldn't set out as any organization and just believe that your goal is to maximize the number of clients. Okay. The more clear you can be about who your client is, the better off you are going to do. And so as an example, let's take me as a consultant. If I'm writing a book, who am I writing it for? Well, I'm writing it for my clients. Now, if my client base is, let's say, the top 100 CEOs, I'm only focused on the top 100 CEOs and what should be written in that book or in that paper. Now, if you go and start answering everyone's questions, middle level management, lower level management, people that are working in NGOs, when you're focused on this particular industry, you're just going to get bogged down and offer, poor services. And so a lot of the companies that are doing particularly well are focused on a niche. So as a startup, you have to focus on a niche, otherwise you'll die. And as you get bigger, the more you move away from being focused on the niche and try to become, solve everything for everyone, the more likely you're going to start to actually go and get it wrong. How much of this is just marketing, Andrew? For most companies, I think most of it is just marketing. And you've got to be careful of that, but you can smell it, you can see it. When people are using purpose as a marketing gimmick, in the same way when people are greenwashing because they're a country or a business that wants to be shown that they're kind of ESG friendly, you'll see it because it doesn't come through. I think when you look at purposeful organizations, it goes throughout. You talk to their staff, they are aligned and they're talking the same language as the senior leadership team, as the customers. And then you can see it because oftentimes there'll be transparency. You can see, for example, the website goes down. We're open about it. We told you it was an honest mistake. We're trying to achieve our purpose. And so I do think most companies are kind of cheating here. Companies that try to do it, it's going to make no difference at all. And then what happens is every 2 or 3 years, a new leadership team come in and they think, let's rebrand, repurpose, and they start again. And you go through one of those, 2 of those in a couple of years, your staff lose, they just lose excitement about it. And actually you lose the commitment of your staff. There's quite a few organizations I know about who've ended up in that sort of situation. With worse purpose, who's this non-Sakala? Is it not that a business needs to be transparent with its customers and staff? What happens when a company is not serving its purposes to its staff? Yeah, it's a great question. This is something which I always find a really simple answer in the sense that you've only got one option. If you're working in an organization which is telling you something or trying to make you believe that it's purposeful or asking you to do something and you're not aligned to that because your purpose is different, or actually they don't have one and it's just forcing you to work long hours for numbers and you can't rectify that, I advise you leave, get up and march with your feet. You can try to do the battle, but if you've ever tried to change anything in a large organization, I think you'll come to realize quite quickly it's really difficult, right? The inertia of change in large organizations is almost impossible. And I don't mean negative, give it a go, but unless it's the CEO and that leadership team and maybe even the board who are driving purpose down, it's really, really difficult to go and drive change up, if not impossible. And you certainly run the risk of, getting very burnt and becoming a bit of a pariah on that sense. So that's a bit of a negative answer. Any tips for training the next generation for the new tomorrow in the insurance industry? Yeah. Get people interested in what the insurance industry should be trying to do, right? And then if they can get interested in that, they'll become more interested, I think, in the technical aspects. So my view about the short-term insurance industry is your number one goal should be to prevent people from having to claim insurance. Okay, setting up a structure where you help me to do the right things so that I don't crash my car, so that I don't have my iPhone that's stolen, or don't burn the house down, or whatever it is that's covered. Help me to understand how I can go and be preventative in a really cool way. I'd sign up to that type of insurance company immediately. And then when the situation does occur, just go the opposite approach in terms of asking me to prove exactly what it is that's happened before you'll actually do anything. Take the opposite mathematical approach and say, here's the money, right? If you're driving the car and it stops very quickly, which is obviously a crash, there is the deposit is made. There is the people coming to come and restore you to try to put you back to where you were. Yes, there'll be fraudsters that are sitting there behind the scenes trying to manage things. Okay, but if you're open and transparent, I want that insurance company. I get really fed up with insurance, for example, where the car's depreciating 20% a year and the insurance premium goes up. It makes absolutely no sense. So if I'm trying to get people interested in working in insurance, I would like them to think they'd be more interested if it was ethical and it's about uplifting their customers rather than thinking about pricing and risk as the key attribute that sits within that profession. Okay, maybe last one or two. Is there a future in insurance? Yeah, there's always the model. I mean, there is clearly a future in insurance. I'm quite interested to see what happens with, the fintechs and the decentralized autonomous organizations. So obviously the key concept of insurance is you're pooling risk across a community so that if there's a minority that have an issue, that everyone else is essentially paying for it. So nothing changes there. It's a good model. I'm just interested to see what happens when you look at the sort of use of blockchain and decentralized autonomous organizations, about whether you're going to have communities that create new types of insurances. A little bit, I suppose, going back to the olden days, a little bit like Lloyd's and the underwriting that's happening, and obviously everyone on Munich Re side is going to know all about that, but something almost 102 years back, but now open for thousands, millions of people globally to be participants in some sort of organization which isn't a company and doesn't have shareholders in the way that we normally expect them. So I think perhaps I should stop there.
Colin, the power of purpose. I will always remember that about you, and you really appreciate that fantastic insert we had just now. Thank you for joining us. So over to our next slot. We usually would have Thokozile with us, but she's not joining us today. We've decided to take the time to make you excited about the African Insurance Exchange. It's coming up in July, and the team here at CN&CO are hard at work, busy organizing a conference that is just going to knock your socks off. And in order for you to get excited and possibly join us still, if you are thinking about it, we've created a special insert that's going to give you an overview of our speaker lineup for AIE 2023. So I look forward to seeing this. Thank you. Okay, so I don't know about you, but I'm excited. I'm attending the conference this year. In fact, the AMI executive team, we are all attending. And after having seen that just now, I am really, really counting down the weeks. I want to tell you that there's still a few seats available, few spots available. So please go onto the IISA website and register and join us. I know this year we've got a hybrid solution for our attendees. So if you can't make it in person, you can join us virtually. And it is, I always joke, I think I've attended 20 of these conferences over the years, but it is absolutely worth your time and money to attend, and specifically post the pandemic, because we are so, it's so amazing to see people and meet people in person. Today we have Munich Re as our headline sponsor. At this event, you will get to meet and mingle with reinsurers, insurers, brokers, inspirational personalities who are there to talk to us. It is a fantastic 3-day event, and I really would like to urge you to join us if you're not already signed up. So, talking about industry events, our next speaker we have on every month, Reinsurance Whitehead. Reinsurance is the co-owner and editor at FA News, and also the mom of the Insurance Apprentice. I was so privileged to attend the finale event. What was it, about 2 weeks ago, a week ago? I can't remember, time flies. And, you walk away from the Insurance Apprentice just feeling so unbelievably excited about the future of our industry. Because my husband is involved, aka Judge Dredd, with the Insurance Apprentice, I know how much work goes into this event. And Reinsurance from us here at the CN&CO team, from InsureTalk team, and I think the industry as a whole, we just want to congratulate you and thank you for taking the initiative to put in all the time to make this amazing event work and bring it to us in such a professional and well-executed manner. So looking forward to the next year. I see the entries are open again. So Reinsurance, on that note, I am going to hand over to you for our media update so that we're all informed on what is happening in the industry and in your world as well. Thank you.
Good morning. First of all, thank you to InsureTalk for giving FA News the opportunity to partner with you. We do appreciate the partnership. It's May, and May means a few things. It's getting colder, it's getting darker, and we will soon be in the middle of 2023. May also means the end of the CPD cycle, and we can most certainly feel the chaos in the FA News office. Everyone is cramming for their last CPD hours. This is then another gentle reminder to please finish those hours soon. You have a few days left, so don't leave it for the last day of the month. Please note that we can already see that our system is starting to take a bit of strain. And if you decide that the 30th or the 31st of May might be a good day to do your CPDs, I've got news for you. You're either going to do literally nothing else, or you're not going to be able to finish your CPD hours, especially if you still have quite a few to do. Even if you just have 3, don't take the chance. It's going to be a frustrating day if you do it on the FA News system and probably on most other places as well. Let's talk about the month that was. So the most recent highlight was the FA News webinar on grid exclusions and the possibility of grid failure. It was a great webinar. Monique Leroux from the CSIR spoke about the stats and the likelihood of grid failure. The graphs, stats, and references were extremely insightful, and the message she ended with was that the chances for a total grid collapse at this stage is minimal. Vivian Pearson, SAIA CEO, spoke on behalf of the insurers and explained what is happening in the background, and she also talked about Sazria's announcement. Seamus Casserly represented the FIA, and the big message from Seamus was that clients don't have any contract certainty at the moment. He was adamant that the policy wording is an issue, and he ended by saying that the media, excluding FA News, is not doing anyone a favour by blowing everything out of proportion, and they are creating chaos. A lot of questions popped up about the wording issue, and it seems like there is a general concern about this. The definitions are not clear. It's all round definitely an issue. So if you want to go and watch the webinar, you can visit the FA News YouTube channel. The webinar has been loaded and the slides are also available in the comments section. So if you can't find it, just drop me a mail, Rianette@FA News, and I'll send you everything you need. It is really interesting. So the FSCA published their most recent regulatory report. The reporting date is 1 April 2022 to 31 March 2023. The report not only provides insights into the activities of the FSCA's enforcement effort during this period, but also seeks to augment credible deterrence through visible enforcement, create awareness of regulatory requirements and the FSCA's expectations for embedding good conduct and ensuring fair outcomes for customers. The report is most certainly an interesting read and can be found on their website. If you need it and you can't find it, also feel free to just drop me an email. Something that stood out for me was the summary of the enforcement interventions. 210 debarments, 421 licenses withdrawn, 984 licenses suspended, 6 people removed from regulated positions, 406 finalized investigations, and 100.6 million rands in administrative penalties. A lot more interesting stuff to read, so make sure you find that. Lloyd's South Africa turned 25 this month. Congratulations, Lloyd's. Another big birthday is Associated Loss Adjusters turning 40. Congratulations. So I've been talking about the insurance apprentice in each InsureTalk session. So today I'm concluding with season 9. We had the finale on 11 May at Hollard. Beautiful venue once again on the lawns, and what an event it was. This season was most certainly one of the best, if not the best season we've seen so far. We've announced the winner on the night, and from our side, once again, congratulations to Christopher Appenau from Bright Insurance. What a bright guy. A worthy winner and someone I know will carry the TIA flag. So proud of this winner. This is then also a mention to all of you who are 35 or younger and 4 years or more in any part of short-term insurance. Applications are open. If you've entered a few times before and you're not sure if you should do it, just do it. Quite a few of my contestants have done a few stints before they ended up in the top 10. And maybe you never end up in the top 10, but in your journey, to at least try, you meet phenomenal, amazing industry people that you build connections with that will last you a lifetime in this industry. My top 10 contestants of every year, but this year obviously because it's still fresh, are available. If you have any doubt, if you're not sure, connect with me, connect with them on LinkedIn. Read about their journeys from this year. Connect with them, and I promise you, all 10 of them will jump at an opportunity to have coffee with you and tell you why you should do this. Don't hesitate. If you are someone that needs a challenge, if you feel you are one of the future leaders, if you feel that you have stagnated in your position where you are, if you feel that you haven't had something exciting happening in a while, then this is for you. If not, please don't apply. We are finalizing our June edition. June will go live on 14 June. And we're holding it a little bit back because we know that Hollard is busy with some exciting campaign. And I'm not going to say much. All I'm going to say is make sure you watch and have a look at the FA News June edition. From the very first page, you're going to see something there. Then, of course, a reminder to register for the AIE conference taking place in July in Sun City. Your place to network, to earn CPD hours, and to just mingle with all the industry people that you haven't seen in a while. A reminder that we have the calendar. If you are an organizer of any events, if you're looking for events, thecalendar.org.za. Go and see if there's anything. If you organize an event and you want people to attend, you or from the institutes or anyway, please feel free to upload your event. It does not cost you anything. We get a notification to approve it. Thank you for listening. And once again, thank you to InsureTalk for the opportunity to partner with you. My name is Rianette Whitehead, FA News editor and the project manager or creator of the Insurance Apprentice. Enjoy the rest of your session this morning.
Rianette, thank you for that, as always. Well informed after we've heard you speak for 10 minutes, so thank you very much. Now, as you know, the team here at CN&CO and InsureTalk have been supporting local entertainment talent, musical talent, since the beginning of our lockdown time. When I walk around and I see the remnants of lockdown, I just go, oh, thank goodness we survived that. But one of the good things that we kept over from that time is this nurturing of South African musical talent. And today we have someone absolutely amazing for you. If you are from Cape Town or you've been here on holiday, you might have seen him around, performing around the city, but also around South Africa. Our singer today is Stanley Sebande. Now, Stanley is a Zambian-born multi-instrumentalist, singer and songwriter, and he's built up quite the reputation. I just want to tell you a little bit about his achievements. His debut album, Hopeless Dreams, was released in August 2021, following his signing with labels STFD Records and Just Music in 2020. With two singles that peaked at number 3 and number 2 on 5FM and the Mix FM respectively, the album has been received well and shows a bright future for this wonderful young artist. So we are looking forward to your performance this morning, Stanley. Grab a coffee or a glass of water and join us to celebrate our wonderful musical talent we have on this continent.
Hi guys, how's it going? My name is Stanley Sebande, and I'm going to be playing a few songs for you guys now. I'm very happy to be here for InsureTalk edition 32, and I hope you guys enjoy my music. So this first song that I'm going to be doing for you guys is a song called Home by Philip Phillips, and yeah. Hold on to me as we go, as we roll down this unfamiliar road. And I know these waves and they string us along. Just know you're not alone, 'cause I'm gonna make this place your home. Settle down and all be clear. Don't pay no mind to the demons that fill you with fear. The trouble, it might track you down. You get lost, you can always be found. Just know you're not alone, 'cause I'm going this place your home. Settle down and all be clear. Don't pay no mind to the demons, they fill you with fear. No trouble, it might drag you down. You get lost, you can always be found. Just know you're not alone, 'cause I'm gonna make this place your home. Okay, thank you very much, guys. So this next song I'm gonna be doing for y'all is a song by one of my favorite artists. His name is Bob Marley. Some of you might know him, and it's a song called "Three Little Birds." Hope you enjoy it. Don't worry about a thing, because every little thing is gonna be alright. Don't worry about a thing, because every little thing is gonna be alright. Rise up this morning, smile with the rising sun. Three little birds perched by my doorstep, singing sweet songs, melody pure and true. Singing, this is my message to you. Don't worry about a thing, because every little thing is gonna be alright. Don't worry about a thing, because every little thing is gonna be alright. Rise up this morning, smile with the rising sun. Three little birds perched by my doorstep, singing sweet songs, melodies pure and true. Singing, this is my message to you. Rise up this morning, smile with the rising sun. Three little birds perched by my doorstep, singing sweet songs of melodies pure and true. Singing, this is my message to you. Okay, so this next song I'm gonna be doing for you guys is an original of mine. It's on my debut album. It's a song called Wildfire, and I wrote it right at the beginning of the pandemic, because there were a lot of people who were losing their minds, and at the same time there were a lot of people around me who still stayed strong and still sort of, kept on the path, and that was very inspiring for me. So yeah, I hope you guys enjoy it. I have been Stanley Spande. If you'd like to follow me on social media, you can by just searching for me, Stanley Spande Music. You can also stream my debut album on all major streaming platforms. It's called Hopeless Dreams, and I hope you guys have a lovely day further. Thank you.
Hold on to what you find. Carry on, don't fall behind. Feel the fire that burns inside. Fight the demons with all your might. Staring up into the stars. Waves are crashing by your side. Stories so deep in your eyes. Burning bright like a wildfire. You're a wildfire. You're a wildfire. You're a wildfire. You're a wildfire. Looking up into the night, flowing through me like a drug, patching up the battle scars. Still I burn like a wildfire. I'm a wildfire. I'm a wildfire. I'm a wildfire. I'm a wildfire. I find comfort in your arms. You're a wildfire. I find comfort in your arms. You're a wildfire. I find comfort in your arms. You're a wildfire. I'm a wildfire. I'm a wildfire. I'm a wildfire. I'm a wildfire.
Thank you.
Welcome back, everyone. We in the last hour or so of our conference today, or virtual event today, and I have the wonderful honor of introducing a very old friend, VP Pinaar. He's our next speaker. VP and I have been working together at various large organizations since the late 90s. So we really do have a long history. VP is the head of Old Mutual Insure Premier Agri and Risk Solutions. He is possibly, and please, this is my opinion, the best commercial underwriter in the South African market. And there is no better person to talk to us about the topic that he's chosen for today. Some might say brave. I think very, very necessary. He's going to talk to us about grid failure, solar installations, and then hot work permits with regards to policy wordings, and what are those hidden dangers. And it's something that I've been going around the market as well in my environment, which is personal lines. And I've noticed, and this is brokers from Joburg to George to Cape Town, there is so much anxiety and confusion around the grid failure exclusion, national versus municipal, the impact on the policy wordings, the power surge exclusions. And I honestly believe that after we've heard VP today, we'll have a lot more clarity. I wouldn't be doing VP justice if I don't give him a little bit of an introduction. So, as I said, he's the head of Old Mutual Insure Premier. He's an underwriter at heart. VP started his career in 1990 with a large insurance company when policy schedules were still tight and no computers yet. I also remember those days. He worked his way up as an underwriting clerk, issuing Sasria coupons, and got promoted to underwriting team leader and subsequently to the role of marketer. I did not know that about you, VP. At a time when marketers did some of their own surveys. He ended up at head office underwriting, where he spent most of his time completing underwriting audits, due diligence, and reviewing policy wordings. He's an underwriter at heart, and he finds this to be quite fulfilling. And yes, with initials such as Vipier, I have no option other than supporting Western Province and this weekend the Stormers. So let's hear what you have to say about this topic. Thank you, Vipier.
Hi, good morning, everybody, and thank you for the introduction, Christelle. I prefer not to use the term old friend. I would rather use the term mature friend. And yes, underwriter at heart. I don't think I'm going to answer all your questions regarding grid failure and power surge cover and all of the pitfalls, but I think it's necessary for us to talk about grid failure, understand where it's coming from, and why we are doing what we intend on doing. So thank you very much, and thank you for InsureTalk for inviting us. I'm going to share my screen in the presentation just to give some ideas. We like to think in pictures, and I think if you talk to any underwriter, we tend to find that underwriters like pictures. So yeah, thank you very much. As Christelle said, we're going to touch on grid failure, why we have all of the different exclusions that's going around in the market, and is it actually necessary to have all of this grid failure exclusion? Aren't we just overreacting? So I'm going to talk a little bit about that. With all of the load shedding that's going on, every single person is trying to install solar at his house. It also means that we've got thousands of people that's trying to install solar. So are we comfortable with all of those people installing solar? Hard work permits, one of my favorite topics. And I think a few of my colleagues are getting a bit tired of hard work permits, but I love talking about them. And then finally, I just want to touch a little bit on policy wordings. There's a quiz in the policy wordings. So keep your fingers ready to type in the Q&A some answers. So let me get cracking on grid failure. So grid failure is an exclusion that's been implemented by most, if not all, of the insurers and reinsurers in South Africa. And the first question is it really necessary? Are we now going down a road where we're just upsetting the market and there's no real need for this specific exclusion? So when this first came around, I did some digging around just to understand what our structure looked like, our electricity infrastructure. So this should look familiar to everyone. This is pretty much our grid, what it looks like in South Africa. We've got the nuclear down in Coburg, generating about 1,800 megawatts. Then we've got a number of hydroelectrical pump stations, and I'm sure not all of you know about them. We've got one at the Garib Dam, and then one up in Durban, close to Durban. So that generates about 600 megawatts. So very, very small in comparison to nuclear. But the kicker is we've got 45,000 megawatts being generated by coal-fired power stations up in the north. Now, why would we build all of our power stations up in the north when we have to distribute the power all across the country? The answer is quite simple. Because it's coal-fired, we had to build them very close to the coal fields. Now, unfortunately, this also means that if something happens to this infrastructure, the whole of the country goes down. You can imagine if you lose 45 megawatts of power up in the north, the one nuclear plant down in Cape Town is not going to do the trick. So we've got a very integrated power supply and power distribution network with all of the power, or 95% of our power generating capacity, sitting up in the north. There's a lot of talk about the solar farms that's been built in Uppington, De Aar, and Prieska. So if you Google solar farms, there's a number of them that's sprung up in the Northern Cape area. Now, those of you that come from the Northern Cape will realize there's like 99% of the year there's sun. So it's almost never when there's not sun. So it's an ideal place for us to erect all of the solar farms. The challenge we've got is that the distribution network has never been upgraded from the Northern Cape. So the whole infrastructure has been built to generate the power up in the north and then transfer and distribute it to the rest of the country. The Northern Cape, being a recipient of power from the northern regions, has never upgraded their distribution network. So it means that all of that solar farms pretty much is mothballed, or it's sitting there idling, and we can't get that power back into the rest of the country. We do have a few peaking power stations. So this is what you would normally hear on the news. There's a few units down and they had to start with the gas-fired turbines. So this is what it comprises of. There's only 5,800 megawatts of peaking power stations. And this is what leads to the significant load shedding tables that we've got at the moment. Is the moment something goes down, we've got limited capacity to fill that gap within the power network. So if you have a look at it, there's 3 pump storage units, Bergville, Grabouw, and Ladysmith. They only produce 2,700 megawatts. And the challenge with pump storage is you have to have water in the dam to generate any power. So our infrastructure pretty much built in the north and then distributing the power to the rest of the country. So I suppose the next question is, why do we have load shedding and what is grid failure? Now, on the Eskom website, they pretty much explain it quite nicely what load shedding is. That is when there's not enough power and we have to switch off parts of the country so that we don't end up with a blackout. And I think this is the scary part. Blackout happens when there's not enough supply and there's an over demand on the system. So is it possible? Can it happen? Is it only happening in South Africa? So we like to say, well, it's only in South Africa. It doesn't happen in the rest of the world. But unfortunately, guys, the reality is that this has happened in the past, very recently in the rest of the world, and I'll share some of those examples with you. So yes, unfortunately, it can happen. The biggest challenge that we've got in South Africa is that we have our own power universe. So all of our power is being generated within South Africa with a little bit of power coming from the north, from Kabora Bassa Dam. But the majority of our power is actually being generated within South Africa. Now, the disadvantage for us is that other countries in the world can rely on their neighboring countries to supply them with power if there's a blackout. So a blackout means everything trips and there's no power. According to the Eskom website, repairing and restoring the power within South Africa can take up to 2 weeks. And that's a very optimistic guesstimate, I would say. So you can imagine the country without power for 2 weeks. Okay, so back to my question, is it possible and can it happen? And has it happened elsewhere in the world? And the sad reality is it happens quite often across the world. A very recent one was in January the 23rd this year. 230 million people in Pakistan was without power. So that was only a day. You'll say to me, well, only a day. What does it mean in South Africa if we're out for 2 weeks? Now, there's a very good example. In 1999, there was a lightning strike to one of the transformers in the network in Brazil, and they were off between the 11th of March to the 22nd of June. So fortunately, it wasn't for the full period for 3-4 months at a time, but within that period, there were large areas where up to 97 million people were without power for extended periods. Another recent one, or not so recent, in 2009, was Brazil and Paraguay. Another 60 million people without power for the period the 10th of November to the 20th of November. So that was for 10 days, 60 million people without power. So that is quite a sobering thought. For interest sake, that specific outage was caused by a storm and it hit the infrastructure. So if you look at the possibility, it can happen. I think South Africa has one of the best systems in place to manage blackout and to prevent a blackout. But unfortunately, that means that we will have to endure this load shedding schedules for another couple of years until all the work that's been ongoing with wind turbines and solar farms is finally concluded and the infrastructure has been upgraded. So on a more positive note, we do have a lot of sun in South Africa across the country, not only in the Northern Cape. So a lot of us are looking towards solar installations to help us through this load shedding schedules. So if you're an underwriter, and I suppose most of the people within the insurance industry, your first question would be, so who can install solar? I need someone dependable, someone I can trust, and someone that will install the system according to a specific code and a specific standard. Every second person that's installed alarms in the past is now installing solar systems. So where do I find someone that can actually help me? Or do I just take the first person that comes around? So fortunately, there are a number of associations that can help with solar installations. The first one that I'm aware of is an association called the Africa Solar Industry Association. The difficult part is they are situated in Rwanda, and I don't think they're going to help us that much. But if you Google Association for Solar Installers, this one will pop up. A little bit closer to home is an association called the Association for Renewable Energy Practitioners. They train the people that belong to the association, and you have to write a test. The good news is for us as consumers, you have to get a 80% pass rate before you are accredited to install solar. Another company, and I think this one is one of the more known associations, is a company called SATFIA, South African Photovoltaic Industry Association. They issue something that they refer to as a PV green card. They've got a list of solar installers that they've tested and that they've accredited. So a very good association that will also make sure the members are up to date with the latest development and the latest technology. I was quite surprised to find out and come across this ombudsman that's actually looking after the consumers' interest as far as solar panels are concerned. So there's something called the Energy Industry Ombudsman of South Africa. And one of their strategies is to make sure that installers comply with the regulations and standards. And people like us installing solar can call on them if we're not comfortable with a specific installation or the workmanship. So unfortunately, there's no contact details on their website. So I'm not 100% sure how you're going to get hold of them. They've got a website, no telephone number, no email address. But the good news is we've got something like an energy industry ombudsman. So let's hold thumbs that at some point in time they are able to assist us as consumers. Okay, I'm sure you guys have seen this depiction previously. So what does a solar system consist of, and what are the concerns, and where do we need to focus on? So this is your standard, if there's something like a standard grid-tied hybrid system. It's not a standalone system, and you're still dependent on Eskom for power. So what does it consist of? Well, first and foremost, you've got the solar panels. Then you've got your inverter. The inverter transfer and convert your direct current from the sun on the solar panels into alternative current that you're going to use inside the house. And then you've got your batteries. What's very important is that you ensure the surge protection is installed on both the direct current and the alternative current. You can imagine having a steel structure, aluminium structure on top of your roof to which the solar panels are mounted will expose you more to lightning and lightning strikes. So it's extremely important that you ensure that the surge protection is in place, especially as some companies are reviewing the cover for power surge. So one of the first things that you have to check is that your installer make sure the surge protection is in place. Then secondly, and almost as important, is the earthing and the bonding of your solar panels. Okay, so to what standard will they install the solar system? The standard that they currently use is SANS 10142, and this is the standard for your electrical installation. So all of the electrical installations in our houses comply with SANS 10142. And when you appoint a properly trained electrician, he will issue a certificate of compliance, a COC, and that COC will be issued in terms of SANS 10142. But it's SANS 10142 Part 1. The part that relates to solar installations is still in draft. I've checked it 2 weeks ago, and unfortunately, we still don't have a final standard that they can install it to. But for now, they will do a COC based on the old standard until such time as the solar portion of the standard has been upgraded. There are another 2 standards, and they relate to the solar installation and when you feed electricity back into the grid. Christelle, I think you are more fortunate than us. I think the Western Cape has made some good progress as far as feeding back into the grid is concerned. For us up in the north, we're still struggling a little bit, and there's no benefit for us, and we can't feed back into the grid. So very important, guys, when you get someone to install a solar system at your house or at your business, that you get someone that is properly accredited, and we would recommend that you get someone that's been tested in terms of a code somewhere, and that you make sure that the person installing the system actually know what they are doing. So from an insurance point of view, what are the concerns and what do we need to be on the lookout for as consumers? Well, I've got some good news and some bad news as far as the fire exposure is concerned. The good news is it doesn't happen often. So it happens very infrequently and very rarely. The problem, though, when you have a fire in your installation is that it's extremely difficult to fight the fire. For the simple reason, as long as the sun is shining on your solar panels, power is being generated by the solar panels. There are even some articles that claim if you have a fire at night in the solar panel, the light of the fire or the fire generates enough heat to still power your solar panels, and the power will just keep on flowing. So you can't switch off the power on a solar panel. You can switch off the power between the solar panel and your inverter and the batteries. But while the sun is shining, you've got power on your solar panel. And all of us know you don't put water on electricity, and especially not on your solar panels. Okay, so good news, it doesn't happen often. Something that's more of an exposure for us up in the north, and it's starting to hail down in Cape Town as well, Christelle. Durban, Pietermaritzburg, hail exposure. Most, if not all of our solar panels that's being imported are being tested according to certain size hail, and it's been manufactured to withstand decent size hail. But as we know, up in Johannesburg, we get some significant hail. And you may not see the damage up during the first hailstorm, but there's something called micro cracking. So this is something that happens and difficult to detect. It's small little cracks within the solar panels, and over time, the solar panels stop producing the required electricity. And unfortunately, this is not something that you can manage, just something that we need to be aware of over a period of time. If you have multiple hailstorms, multiple hailstones on your solar panel, the panel will stop working. Okay, we've all read some articles and seen some video clips regarding lithium-ion batteries that catch a light and everyone is concerned. So there's a few myths that we need to address. The first one is lithium-ion batteries are unsafe, and that's not true. So generally, lithium-ion batteries are generally very safe. It does happen that they catch a light and something runaway thermal runaway. It means that the battery gets so hot that it just catches a light, and very difficult to fight that fire, which brings us to the next myth. The myth is lithium-ion fires are typical of other industrial fires, and it's easy to fight the fires. You can just put water or foam on it. These fires are quite difficult to fight, and you can't use your standard hose reel hydrant. So it's very important that we understand, although they are not intrinsically unsafe, if they do catch a light, it is difficult to fight that fire. Storage height is not a concern. I think this goes without saying. We should not stack our lithium-ion batteries excessively. And then something that's quite interesting is there are standards that risk managers and facility managers can rely on when they install and use lithium-ion batteries. Now, company NFPA is an American company, and they produce standards for the industry, for the insurance industry, and for consumers to use. And as at the middle of 2022, they still didn't have any standards that you could use when you deal with, use, and install lithium-ion batteries. So that is something that is still lacking within the industry. And even in South Africa, we struggle to get standards that we can use when we deal with lithium-ion batteries. Okay, something that we all used to and shouldn't be used to is the level of crime. Theft of ISO panels, of the solar panels, and theft of batteries and inverters is on the climb. It happens quite often. And a very isolated incident that we saw quite recently is where there was an armed robbery at a house where they just cleaned out the solar installation, left the panels on the roof, but they cleaned out the inverters and the batteries. Very expensive to install solar. As you know, it can range anything from 150,000 upwards, and that's the cheap system. So unfortunately, something that we need to be aware of as an insurance industry is the exposure that this poses, something like armed robbery and theft of solar panels. Unintended consequences of solar installations. And the first one that comes to mind is the installation of LP gas. If you don't want to spend an arm and a leg on a solar installation, the easiest way to install an affordable system is to change your geyser to gas and your stove into and use LP gas. Very important that whenever we do an LP gas installation, that we do it properly. There's very good guidelines that we need to comply with when we install gas. This is a depiction of items that you need to keep in mind. LP gas is heavier than air, so the moment it leaks from a gas bottle, it means that it will sink down to the ground, and hence you are not allowed to store your gas cylinders closer than 2 meters to an air vent or a drain, because the gas is heavier than air. It will sink to the ground and it will pose a significant exposure. For us in the insurance industry, very important that all the installations must comply with the SAQCC gas, and the installer must be registered with the SAC Gas Association and issue a certificate of compliance. Something that we've picked up is generators and backfeeding into the system. People tend to save a little bit of money. They don't want to get an electrician to install the generator properly. I hope you guys are not aware of this practice, but we've seen it in a number of cases where the client will just merely take an extension lead, plug it into his generator, and then plug it into a wall socket in his house. In other words, he doesn't feed it back into his distribution board. He merely plugs it into the wall socket. Now, don't quote me on this one, it will actually work. The problem with that is the installation, your normal house installation, has never been designed to deal with the power load from the generator back into your house. So it's a very, very dangerous way of dealing with it. So just be aware of it and advise your clients to never, ever do this, even though it will work. Okay, so to wrap up on solar installations, what do we need to keep in mind as an insurance industry? Firstly, the quality of the installation. So use certified installers and make sure that there's proper protection to the system and back into the wiring of your house. Make sure that you address power surge and earthing and bonding. And then secondly, is the quality and the type of the equipment. There's a number of solar panel manufacturers. Many of them only produce tier 1 panels. Now, tier 1 is the upper level of solar panels. So this is your Rolls Royces of solar panels. And we would definitely recommend that clients use only tier 1 equipment. It's important to make sure that the inverters that is installed has actually been designed for the specific installation. And then something that's a very difficult concept is batteries and the longevity of batteries. So most of us would prefer to install lithium-ion batteries. They are very expensive, which means some clients will install lead-acid and gel batteries. Nothing wrong with it. The only challenge that you'll have is that a lead-acid battery will last between 3 to 5 years. Gel batteries maybe between 5 and 7 years. Lithium-ion batteries will last between 10 and 20 years. There's some companies that actually issue warranties up to 25 years. Something that we've picked up quite recently is something called a second life battery. Now, this is actually batteries that's been taken out of electrical vehicles. So for the first 1,000 cycles, or let's call it the first 8 to 10 years, these batteries were actually used in electrical vehicles. There are some companies that then harvest the batteries, recycle them, and repack them into lithium-ion batteries for solar panels. They warrant the battery for up to 10 years. The challenge, I think, what we just need to keep in mind is that it has been used previously. So it's pretty much a second-hand battery that's been repacked and revived. So important to understand what the differences are between the batteries and the typical installation that your client has installed. Which brings me to the last point, is possible incompatibility. And what I refer to on this one is if you install a system with a specific solar panel, specific inverter, and specific battery, it's not always compatible with a new battery. So it is possible that there's hail damage to your solar panels, and when you want to replace the solar panels, you find out that that specific panel is no longer being manufactured, no longer being imported, and you could end up with a significant loss, which will end up in a claim possibly, where you have to replace all the solar panels, even though only 3 or 4 or 5 of the panels have been damaged. So it's something that we as an insurance industry need to be mindful of and just be aware of. If the claims get out of hand, prices will go up, and we may end up with significant problems as far as affordability of the cover is concerned. Okay, so that is, in short, the challenges and the opportunities that we've got with solar installations. And now next topic, one of my favorites, hard work permits. Firstly, what is hard work permit? I'm going to help you with the answer. Hard work permit or hard work is all processes that involve burning, welding, or any other hard work. So if you do welding, soldering, cutting, arc cutting, that would be defined as hard work. So how dangerous is hard work? I found this nice summary from the NFPA. It relates to cases within in the larger USA. 4,600 structural fires involving hard work per year. This is for the period 2013 to 2017. So that's quite a large number of structural fires that involved hard work. Of that, 57% were in the industrial areas and 43% were in residential areas. So even at houses, we still find a significant in a significant number of instances where hard work is involved. What's more concerning is within that period, 2013 to 2017, there were on average 15 civilians deaths per year and 198 civilian injuries per year, which caused 355 million rand worth of property damage. 5 firefighters unfortunately lost their lives in that period. So it is a significant problem, 4,600 incidences. Okay, so I can already hear some comments. This is only in America. It doesn't happen in South Africa. So do I have some examples of hard work that cause significant damage in South Africa? Yeah, there are quite a few. Can you guys still recall the fire at Macro? It was by hard work. Then one of the largest industrial fires in an industrial warehouse that we've seen in South Africa was this fire in Durban. You can recall this one in the harbour area a couple of years ago. And then lastly, quite an interesting one, and I'll touch on it a little bit later on. This one in Bram Park. We had this office fire in Bram Park, which was also caused by hard work. So yeah, interesting. Even offices do suffer losses as a result of hard work that's not properly managed and properly contained. Okay, so let me deal with a number of myths. We do get quite a large number of questions on hard work, and we would like to help our clients understand what hard work is. The first one is that companies that use hard work in their daily processes would then also need to issue a permit every time they conduct hard work. And the example that clients normally give us is my insured is a general engineer and he manufactures trailers. So does he need to issue a hard work every time he works on a trailer? No, most definitely not. Businesses that use hard work as part of their normal business processes have areas that is designated for the hard work, where they do the cutting and the welding, and they put up nice screens, welding screens, to contain the sparks and the hard work. So no, most definitely, if you have a client that deals with hard work in specific areas, as long as they keep the hard work in that area and only limited to those areas, you don't need to issue a hard work permit. So clients can relax. Okay, this is a very interesting one and one that I get quite often. The myth is officers don't need to have a hard work permit because they don't do any hard work. Now, that is unfortunately not true. It is especially handy for companies and businesses that don't do hard work often. For the simple reason, and I've got a nice photo, so this chappie was busy working in the ceiling, cutting and grinding, but he didn't remove any of the flammables and the combustibles underneath. So there's paper and there's a table, a wooden table, and he was just happily cutting up in the ceiling. So hard work permit, guys, it's a very handy tool for our clients to manage any hard work that happens within their premises and at the business. And then lastly, the fire brigade needs to issue the permit. That is just not true. So the good news is the permit is definitely not issued by the fire brigade or any other government organization. It is a person that works within the insured business that issues the hard work permit. And I'll share that a little bit with you. So most insurance companies will be able to assist you with a hard work permit. It recognizes what exposures there are in the area where the hard work is going to take place. It evaluates the exposures. In other words, are there any combustibles? Are there any flammables? And then it helps you control the exposure. So very briefly, it tells you, check for flammables, make sure that you point out where the fire extinguisher is, where the hose reel is. Tell the person doing the hard work what to do in case of an emergency. And then lastly, just go back to the area where the hard work was conducted, 30 minutes or an hour after the hard work has been concluded, to make sure there's nothing that's smoldering or burning at that point. And it's as easy as that. So a lot of large losses can actually be managed and mitigated and even be avoided if the client uses a hot work permit system. Okay, so that's it on hot works. Let me get on to policy wordings. Now, let me see whether there's any takers on this one. This is a wording that relates to contagious and infectious diseases. And yes, I know we no longer provide this cover. And I'll give you a few seconds to read through it. It talks about, in consideration of the payment of an additional premium, it's hereby declared and agreed that the business interruption section has now been extended to provide cover for infectious or contagious diseases manifested by any person while at the premises. And maybe paragraph B will give it away. It talks about, in consequence of an outbreak within a certain number of miles of the premises of a notifiable human infectious or contagious diseases. So pop question, guys, pop quiz. When do you think this wording was first produced? I got this from a book, Honor and Hickman's Principles and Practice of Profit Insurance, 3rd edition. So any takers on that one? Maybe pop it in the chat. 1960. Okay, I've got 1960, 1956, 1966. Yeah, we're getting close. That one before COVID. Yeah, 1980s. Sure, yeah, there's a few good guesses. 2021, 24. Yeah, there's a few very good guesses. At 1960s, yes. Okay, thank you. There's a few very good guesses. I get to send someone attended one of my previous sessions. A few before I was born. I don't know when you were born, Dominic, but good guess. 1998, 1922, old world before COVID. That's a very good answer. Okay, cool. Let me, there's a few very, very close guesses and a few that's actually spot on. So thank you for sharing your ideas. It actually was introduced into the insurance market in 1966. Marcel, you were very close, 1967. Leroux, just before the Spanish influenza, yeah. So 1966, guys, this policy wording actually came out first. So it's been around for a while, 50, 60 years until we had COVID. And if you read the policy wording very carefully, you can almost see this being used verbatim up until we hit COVID. So yeah, not much change in the policy wording. Now, there's another one that I want you guys to just think about. This is a very interesting one. Now, we've spoken about grid failure and we've spoken about public utilities and all the challenges that we've had. So this is another wording. It relates to public utilities. And just referring to the part in yellow, again, it says, in consideration of the payment of an additional premium, the policy will be extended to cover the interruption of or interference with the business in consequence of damage to property at any electricity station or substation, gas works or water works. So yeah, this relates to public utilities cover. Any guesses when this one was introduced? Now, bearing in mind, this talks about electricity at the stations, substations, etc. Let's have a few guesses on this one. Okay, let's see. Jacqueline, 1944. Alicia says just after 2007 when the first load shedding started, 1990s, just last year. Yeah, there's a few that's coming closer. I have a 1956. I have a 1990s, 1987. Yeah, 2021. Okay, so on this one, the things I get, there's a 1960. The sense I get it, most of us think that this is quite a recent one relating to load shedding, quite recent. Yeah, Fred, you are. Yeah, you're very Fred, 100 years ago. 1982, 1987. Okay, there's some good guesses. Okay, Good, 1987. Okay, yeah, thank you guys. A few spot-on guesses, and a few that think this is a more recent development within the industry. Guys, this comes from exactly the same publication, Honors and Hickman, way back in 1966. So why do I raise these two specific policy wordings? We, as an industry, tend to use policy wordings. We expand on them, but we don't really give it much thought as to the impact of it. And to be blatantly honest, I think many of us look at the wording and say, so what can go wrong? I'm not too worried about this. It's been around for 60 years. Nothing seriously has happened. So let me just expand a little bit. I'm going to now not limit the contagious diseases to my premises. Let's expand it a little bit to 10 kilometers. And then nothing happens for a couple of years. And then we expand it to 50 kilometers. But we don't stop, pause, and think of the impact of the cover that we're providing. And as many of you know, both these covers were either included free of charge or a very nominal premium has been charged. So let me give you two examples, and then I'll wrap up. So I'm going to give you two examples of something that I think we as an industry needs to seriously consider going forward. First one. Have you guys heard of a fire at a company called Reinsurance fire, way back in 2021, 2 years ago? Now, initially when this news broke, I wasn't too concerned. I mean, Reinsurance means nothing to me. I don't know them. They're not in South Africa. So what can the impact be on our industry and on the larger economy? So it turned out that this company, Reinsurance, is a manufacturer of microconductors and semiconductors, and they actually had 17% of the market share. 17%. So one fire ended up impacting 17% of the market, and that resulted in a significant shortage of semiconductors and microchips. That was shortly followed up by a fire at a company called ASML Holdings, who also manufactured some microchips. And all of a sudden, we have a serious impact on our business. Now, where am I going with this long story? As you all know, there's a specific extension on the business interruption section referring to unspecified suppliers, and we tend to just include the cover. So we have to seriously consider the impact of suppliers to our value chain and understand the impact on the insurance industry if we get it wrong. Okay, one last example. Any ideas of what this is? Okay, back to the chat. Let me have a look. So any idea, not the tanker. No. Don't tell me that it's an oil tanker. What's the yellow thing in front of the oil tanker? Any ideas? Okay, tugboat. And yeah, LP gas offloading. Thanks, Peter. Gas offloading. It's not a trailer, no. It's a beacon. Yeah, very close. You're getting close, Anthony. It's a beacon, yeah. Power station. Okay, I'm going to give you a hint. This is close to Durban. Do we have anyone that's in the Durban area? That yellow thing in front of this oil tanker. No, it's not fiber. A solar buoy, yeah, close. Weather beacon, no, it's not a weather beacon. It's not a source of power. Yeah, interesting. Eh? This thing is called a single buoy mooring system. Single buoy. Thanks, David. It's a yellow thingy. This yellow thingy is called a single buoy mooring system. So what's the significance of a single buoy mooring system? It's out in Durban. I'll give you another hint, guys. This is one of two in South Africa. Literally one of two. Kim, yeah, you said fuel coming in via the tanker into the yellow thing. Yeah, that is the crux of the matter, guys. Fuel coming in via the tanker into the yellow thing. Oh, goodness. Yeah. So this is a single buoy mooring system. it is one of two. There's one in Durban, one in Cape Town. Now, as you know, most of our oil is being refined. We don't have any refineries in South Africa. We had one down in Durban. If memory serves me, it closed down 2 or 3 years ago. So we don't produce our own refined fuel. So our fuel are being imported through this one little thing, this yellow thingy, sitting out in Durban. And that's where 80% of our fuel comes from. To make it a little bit more scary, to get fuel from Durban through this yellow thingy up to Johannesburg and up to Gauteng, there's a Transnet pipeline. And it's only one pipeline. And there's a nice picture of the pipeline. And that's where most of our fuel comes from. Now, just to conclude this discussion, we spoke about grid failure, we spoke about load shedding. This pipeline requires pumps, electrical pumps. If we've got grid failure, fuel is not going to come through the yellow thingy, and it's not going to be pumped up to Johannesburg. We've got some fuel tankers, petrol tankers that's driving from Durban up to Johannesburg, but not even close to the amount of fuel that we actually need in Gauteng. So just to conclude, I think we as an insurance industry need to think about the cover that we provide our clients, understand the exposure, and from an insurance point of view, insurer point of view, understand what the potential downstream impact is going to be if something goes wrong. And with that, I conclude. VP Pina from Premier in Old Mutual. Thank you, Christel.
So from that marketing underwriter, I think we just have another realization that in South Africa, we don't just do insurance. We are faced with a multitude of risks on many, many different levels. And I think that's what makes us such a tenacious industry. And we stand out. We can be proud of what we achieve in this industry with our head held high compared to many countries around the world. So VP, we appreciate that. That was extremely insightful. Our next speaker is the one that normally sits behind the camera. So I'm very honored to introduce Llewellyn du Plessis today. Llewellyn is the CEO of CN&CO events. He doesn't like being in front of the camera. He's always organizing things behind the scenes, whether it is the InsureTalk event or the AIE, the African Insurance Exchange at Sun City. Someone makes the magic happen, and that is Llewellyn du Plessis. We alerted to the fact that we've got a very exciting giveaway today, so Llewellyn is going to tell you a little bit about that. Anyone who registered for the event today went into the lucky draw, but if you're not here to claim your prize, we will pick someone else. So I'll let him tell you a little bit more about that. And he's going to talk to us about the giveaway and just give us a little bit of insight into the world of CN&CO events. So Llewellyn, I hope you enjoy your moment in the spotlight this morning.
Thank you so much, Christel. And thank you to all of our attendees that's joining InsureTalk today. We can't do this without you. So I'm just going to talk a little bit about the InsureTalk CPD Hub that we launched recently, as well as InsureTalk overall as an event, and then end off with that giveaway that Christel mentioned. So let's kick off. So first of all, thank you very much for all the attendees that join InsureTalk monthly. As you know, InsureTalk celebrated its 3rd birthday in April, and currently we have over 3,500 people registering for this industry event every single month. And as we regularly say, we can't do it without our partners, as well as without you as an insurance professional in the market attending these events on a monthly basis. So Obviously, InsureTalk helps you stay connected. All of you on here on the InsureTalk platform can chat with each other. You can ask questions and regularly interact with insurance professionals once a month. And that is our main goal, to keep the insurance industry connected. Even though it started as a COVID concept, when COVID kept us apart, we've now transitioned into the new normal, which is no longer new. And we still keep you connected, and it just makes it easier for brokers, insurance professionals, suppliers all over the country to earn their CPD hours wherever they are, whenever they can do so. So just a little bit of background. In 2021, we kicked off, or 2020, we kicked off with only 80 people, and the community has grown so much over the years, and we really can't thank you enough. As I mentioned, we are currently standing at 3,500 registrants every month for InsureTalk, and that helps us bring new content to you each and every month with speakers from a global perspective, as well as South African speakers. Currently, we pride ourselves on being the biggest online conference in the insurance industry. And we bring these sessions to you so that you can earn CPD hours, especially with the CPD cycle that's currently coming to an end at the 31st of May. So all of our attendees are currently emailing, making sure that they can get those final points. And that's why we wanted to take this time today and discuss the CPD cycle with you, InsureTalk as a platform, and how we can help you. Because we do see that need that a lot of people leave at last minute. And currently some people are only kicking off this week with complying with their CPD hours for the year. And with InsureTalk, if you do register now for the rest of 2023, you will comply with all the required CPD hours that you will need. So each and every InsureTalk session gives you 2.5 CPD hours, which means by the end of the year, you will be overshooting your target of the required 18 CPD hours. So please make sure that you register in advance and that you attend these sessions going forward, and don't leave it last minute. Otherwise, you're going to have to go through the night to make up those hours at the moment. And then also with InsureTalk and CN&CO events, we constantly involve and try to make the experience better for all of our clients and our attendees. So as you know, InsureTalk, we have the online content currently, which earns you 2.5 CPD hours. You register, you attend it on Zoom, and you can do so for the live sessions, and then also on our CPD Hub, which I'll talk to you in a moment about. Then in 2023, later this year, October, we'll see the very first InsureTalk live session brought to you by Bright, our event partner for that InsureTalk live session. And tickets for this event are available on the CN&CO events website, and you can book it at cnandcoevents.com, or just visit the CN&CO blog and our website for more details. So with regards to the InsureTalk Live concept, it will be a hybrid edition. So all of our attendees that are currently online and registered for that event already online will do so free. And then obviously we also will have a live element where you can attend the session in person in Johannesburg at the venue Melrose Arch. You can network with the industry peers that will be there, and then just connect overall at our networking functions. Then the CPD Hub, I mentioned that we launched this earlier this year. So all of the 2023 sessions for InsureTalk will be available on the CPD Hub. This makes it easier for all of our attendees to go in, log in, and view all of your certificates in one space. You can download it, it saves it there. And we've created this because we've seen a gap in the market where all of our attendees move around from different companies, then they lose access to their emails, or they don't save those certificates, and then it comes to the end of the CPD cycle, and then they worry and stress, and then it becomes quite a nightmare for you as an attendee and as a CPD hour earner. So the CPD Hub going forward will have all the InsureTalk sessions for the year loaded on there. your CPD certificate will automatically be allocated to your profile, and you can simply log in and download your certificate there. And at the end of the CPD cycle, all of them will be there, and you can re-download them should you wish to do so. It is also easier for your company employees, your colleagues that didn't attend the virtual event live because of load shedding or they had a meeting, etc. They can log into the CPD Hub by registering a profile, log in, view the session online, and earn those CPD hours and download their certificate as well. So please make sure that post this event, if there's any of your colleagues or your employees that did not watch InsureTalk today, please make sure that you ask them to register at InsureTalk.co.za. The team will also post a link in the chat box for you, but you can simply log into InsureTalk.co.za, view the session online, and earn those CPD hours. Then it is crucial just to look back at InsureTalk and the impact that it's had. So obviously we're on session 32 at the moment. I can't believe it. Every time I look at that number, I'm still shocked, because when we started the very first InsureTalk, we never envisioned that it will carry on for so long, but it has become a beast of its own. And we're so proud to say that we've allocated over 68 hours of CPD to the industry so far, and we will be continuing to do so for the years to come. Then I just wanted to showcase that we bring speakers from across the globe, as we saw today as well. Munich Re bringing excellent speakers. We regularly have speakers from London, America, all over the world, and then also our speakers that are industry professionals within South Africa, constantly sharing news and the latest trends in the market. Then, as we got a lot of queries for the InsureTalk CPD Hub, I'm just going to take you through a couple of basic elements to make sure that you understand how the system works, and also guide your way through it more easily, so that you can download your certificates and also show any attendees that didn't attend it live to do so post the event. So to get started, you simply need to go to insuretalk.co.za. And you will be logged into the homepage as it is reflected on your screen at the moment. On the homepage, you will either have to register your profile, which it's automatically on, or if you did attend an InsureTalk already, you can just simply toggle right at the top and say log in. If you haven't attended InsureTalk, you need to complete all of the required information fields in order for us to generate a CPD profile for you. And in the end, after completing the session, we will then generate a certificate for you. So very important that you complete the details there correctly and as it needs to be on your CPD certificate. Otherwise, there will be an error on your CPD certificate post the event. Then, if you do already have a profile and you have attended InsureTalk live, during the live sessions, we do record your CPD and we upload it to the portal automatically. So post this event, within 7 to 14 working days, we will upload the attendance register to the InsureTalk portal and your certificate will automatically be there. You will not need to watch the session again on the portal or complete the quiz. You can simply go to completed courses and your certificate will be loaded there. So to log in, you will simply toggle the switch from register to log in, as you can see on your screen, and you will enter your username, which will be your email address used to register for InsureTalk, and then enter your password, which you created. It's very important here that you keep the email address the same as you used to register for InsureTalk. Otherwise, your CPD certificates will not pull through. For your password, you would have received an email after attending the first InsureTalk that was on this portal, which was the February edition, or if you joined throughout the year, and it will ask you to set a password. If you perhaps did not receive this email, it might have been blocked by your server or it landed in spam, and you can simply click on the Forgot Password link and it will allow you to reset a password and then log into your profile. Once you are logged into your profile, you will be able to edit your profile as well. It is very important that you keep this regularly updated and make sure that your ID number, for instance, is correct under your profile. If you do move companies and you use the company email for InsureTalk, you will need to re-register for InsureTalk in order to get the viewing for the live event sent to your new email address. So just important, if you do move companies and you don't have access to your old email address and you want to attend the live event, it is very important that you do re-register for InsureTalk on the Zoom sessions with your new email address. Then to download your certificates, as I mentioned, if you watch the live edition, it will automatically be uploaded to our CPD hub, and under your profile, you will be able to see certificates, and you will click on it and it will simply download a certificate for you, which you can then print or either email to your compliance officer. As you will see also, other courses that you might have completed will also be there. If you missed any of the sessions, we are also loading these up, and you will be able to view these sessions from Monday, and you'll complete the courses online, complete the video. You will not be able to complete the quiz without watching the entire video, and then complete a quick quiz in order to get your CPD certificate. As I mentioned, these additional items will be on from Monday. You will click on the course, enroll for the course, watch the video first of all, which you will need to complete. After you completed the video, you will be able to click on the quiz, complete the quiz, and it will actually give you a completion notice, and you will be able to download your certificate and send it to your compliance officer. So just overall a recap, thank you very much for your support. We've had over 80,000 registrations over InsureTalk for the past 3 years, which is phenomenal. Over 1,800 companies that have supported InsureTalk and over 160 speakers. So thank you so much for every single person's support. And we hope that we will still have a long journey with you and that we still stay your #1 online conference of choice for the insurance industry. Then, as I mentioned, InsureTalk Live will be taking place on 26 October 2023. We are very excited to bring this hybrid edition to the market, and it's been in the works for quite a long time. And you can register today at cn&coevents.com, or you can still register for the virtual edition, which is free of charge, and you can register for that as well on our website. Then, as Priscilla mentioned, we have a really great prize today, and this ties in with Viepia's presentation. So Viepia, let's hope people enjoyed our controversial type of topic today, and we're adding a little bit to it with our giveaway of Truth to Power. We are very excited to give this 3 items away to any of our attendees that's currently online. And we have put them all into a wheel of names, and we are now just going to bring up a wheel of names, which you can see, and do a live draw for you. And 3 of these lucky attendees will win a copy of Andre de Ruyter's book, and the CN&CO events team will be in contact post the event to get those books to you. The only thing is you have to be online currently to be a winner. So if any of you are winners and you're not online, we will then select other winners from the attendee list and then get in contact. So yeah, InsureTalk team, over to you. Let's get that wheel spinning for the 3 names. Great. We can see the first name is up. Kubashni Naidu, if you can just send a message for us in the chat box. Congratulations. Tanya de Jong, I hope that you are online, Tanya. And our last winner, let's get that wheel spinning. This will be for the Under the Writer Truth to Power book. Our last winner is Alfred Mathibi. Well done, all three of you. Our team will be in contact to get those books to you. And thank you so much for joining InsureTalk. It's been really amazing on this journey with you. And I do hope that we will see all of you back again at InsureTalk next month. We still have one speaker to go. So thank you very much for the opportunity. Over to you, Chriselle.
Thank you, Llewellyn. That was actually very good. I think we need you in front of the camera every month going forward. And thanks for sharing some very exciting news with us on that lucky draw. We've reached the last speaker of the day, and as often we leave one of the best for last. Susie Goodman. She's a director and managing executive at Strauss & Co., the auctioneering firm. And in our industry, being able to determine fine art, valuables, collectibles, their value correctly is so absolutely important because it is absolutely crucial at the time of loss. So we are honored to have Susie with us today. She's obviously a member of the executive team at Strauss & Co. And she has extensive knowledge of the local and international art auction business. She's a qualified auctioneer. It's also a world that's quite dominated by men. So one of the reasons why I was so looking forward to Susie's talk today. And she's conducted many high-value and well-known auctions. I want to tell you a little bit about her. She is, as I said, born and bred South Africa. She's also a potter. She returned to South Africa in 2006 and joined Strauss & Co. in 2011. This is after she spent some time in New York, Geneva, all around the world, finishing her specialist internship. And she has done a number of high-profile Strauss & Co. sales, notably the 2016 disposable of the Harderbeck collection and 20.4 million in sales of the J.H. Pierneef's farm, Jonkershoek, with Twin Peaks Beyond, Stellenbosch in 2017. So assets and collectibles and fine art. She was instrumental in introducing Strauss & Co.'s popular themed sales sessions and many outreach programs involving the Turbine Art Fair, Hilton Art Festival, and Bag Factory's Artist Studios that contributed to Strauss & Co. receiving the 2018 Chairman's Premier Award for Business and Art South Africa. She was appointed to the Strauss & Co. board in March 2018. She works out of the Johannesburg office. We are looking forward to a very insightful session, and I'll catch up with you after this.
Good afternoon. Unfortunately, Susie is ill, so I'll be taking the session for her. My name is Arisha Maharaj. I'm an art specialist in the art department in Johannesburg, and I am a specialist in modern and contemporary South African art. Okay. So you got a brief background into Strauss & Co. So we are the leading African auctioneer, and we focus on modern and contemporary African and South African art. Over the past 5 years, the South African ecosystem has seen a growth, especially a strength in the demand for African art in particular. Also, over the past 5 years, our buying base has increased to 48 countries. 11% of all our buyers are new, and there's been a 60% increase in international buyers. And the average buyer, the age of the average buyer has also come down, meaning we are seeing younger people buying art. There's also been a shift in technology. This also has to do a lot with COVID. We have shifted a lot to online and expanding our digital footprint. But I'll talk a bit more about the impact COVID had on the auction industry a bit later. Also, just in terms of the commission structure for Strauss & Co., we do have a very competitive commission structure. We are the lowest commission, I think it is, especially in terms of the international auction houses. International auction houses have commissions ranging from around 24-25% upwards, whereas our commission starts at 12.5%. So it is very competitive. Just an update on sort of the 2022 year. We had an annual sales total of 354 million rand. We held 54 auctions in the 2022 year. And just as a bit of a side story, when I joined Strauss, it was in 2016. And for the entire year of 2016, we held 8 auctions. So from 2016 till 2022, we have now increased to hosting 54 auctions in the year. In total, we've handled 6,381 lots during the year, and we've expanded our offerings to also include wine, decorative arts, including silver, jewelry, and also ceramics. We do have quite an innovative calendar, and this includes auctions both in the live format and online format. And we've got various themes and curated sales, which have made it a lot more interesting for buyers to follow. And we also have a huge drive for education. We're very passionate about education. I think it's particularly a very big drive for Susie Goodman. We host 2 non-selling exhibitions a year, and we also are really passionate about teaching teachers, students, and having as many students come through to our premises as possible. Just looking a bit at some stats. So looking at Southern African art, Strauss, our biggest competitors are Sotheby's, Christie's, Phillips, and Bonhams. Those other auction houses are more prominent in Europe and the US, while Strauss is most dominant in Africa and South Africa. As you'll see, we hold most of the market share at 58%. It is encouraging to see that there is such a big demand for Southern African art in other parts of the world, especially Europe and the US, but majority is still being dealt with in South Africa. And as you can see, Strauss does hold the majority. Just so you can see in terms of Southern African art and where the buyers are, majority is still in South Africa, but you can see there are collectors basically spread throughout Africa, a lot in Europe, the States, South America, Australia, even parts of India, China, Malaysia. So you can see the sort of the growth and the demand for African art that is spreading across the world. In terms of the new buyers that are coming in each year, it is increasing quite dramatically. You'll see in 2021, there was quite a spike in new buyers, and even in 2020, and this was obviously during COVID. The COVID did allow us to go more online, become more virtual, and this obviously opened us up to a lot more international buyers. As you would have seen in the first slide, we've got a 60% increase in international buyers. Over here, you're going to be looking at the different parts of African art. So as I mentioned before about Southern African art, that is the orange that you will see in the graph. And as you can see, that is quite dominant in terms of African art. But lately, the trend is more moving towards West African art. And you'll see in 2022, the Western African art has taken over more dominance in the market. And that is also led by auctions happening particularly in Europe, where there is a high demand for collecting African art. Just a comparative performance of the auction houses, and this is now looking at not just Southern African art, but the African art as a whole, including all areas of Africa. You can see it is a lot more widespread. It is more widespread between particularly Christie's, Sotheby's, and Strauss. And you can see from this, there is basically a huge demand that is developing and also developing more overseas. Our big drive at Strauss & Co. is obviously to be selling more of the African artworks, particularly on the continent, which I think is a very important aspect. Just one more graph, just to show you the growth of African art over the years. This is the auction sales totals that have been reached over each of the years. Each color coded to show you the different auction houses and how they're pulling in. Christie's, you can see, is bringing in more and more African art into their offerings. So is Sotheby's, Phillips, Bonhams, and then obviously Strauss also holding the most. By value, you'll be seeing on the right-hand side, this is the value in US dollars in millions. So in 2022, we made $17 million worth of sales for African art. And in terms of the lots, so lots is the number of artworks that were offered on auction. And here you'll see that every year we handle more and more lots, totaling in 2022, 3,441 artworks being offered in South Africa of African artworks, which is international auction houses aren't really coming close to those numbers of items being handled on the market. This is just an image of our auction room. This was pre-COVID. This was in 2018. We used to host our auctions at the Wanderers Club in Illovo in Johannesburg. And very traditional auctioneer in front, telephone bidders, a room full of people bidding. And then obviously COVID happened and you couldn't really have live auctions. And so from a room full of people like this, we ended up going to having a green screen. Our auctions went completely virtual. While it was still live, we had all the bidders basically bidding at home through a dashboard. The advantage of this is we went from having around 200 to 300 people in a room to now having almost 1,000 people online bidding on our auctions. So it did open us up a lot. We have been opened up to all the international markets. It's made buying art a lot easier. People who weren't so comfortable on online auctions really got thrown into it. And as most companies, we all had to adapt. And so now our auction room just had only the staff members in it and lots of cameras and microphones and screens. We are hoping to get back into more traditional live auctions. It is slowly growing and coming back to normal. In our recent auction in May, we had roughly about 60 people in the room again. So it is encouraging to see that people are coming back into the room, but also the benefits of going online have also been instrumental. We also still have a lot of fun. There's still telephone bidding, auctioneers. On the right, that is Susie Goodman. And on the left is Alistair Meredith, another one of our auctioneers and specialists. And while we have fun in the auction room, everybody else bids online from their phone, from their laptop, and from basically anywhere in the world. A main question that we always get asked is how do we value art? And this is obviously very important in terms of getting an insurance value for art as well. When we look at art, we obviously first examine the piece. So things that we look at is looking at the first and foremost the artist. Do we know the artist? Are they well known? Do they have a good history? Can we track a lot of information on them? We look at the medium of the work. So is it an oil on canvas? Is it a print? Is it a watercolor, a sculpture? We look at the size of the work. We also look at the condition of the work. So the condition for two aspects. Firstly, obviously, if it is in bad condition, it can devalue a work, but also the condition can tell us a lot about the age of the painting. We also then look at the subject matter of the work and also the execution. Some artists could be very well known, but artists also have their good days and their bad days. So the execution does play a vital role, and so does the subject matter. And then we also do look at the frame. Sometimes a frame for an artwork can be significant. Most of the time it is more decorative, but in certain cases, artists did actually make their own frames, and that could also determine the value of a piece. It's also important to look at the back of an artwork. The back of an artwork also tells us a lot. We have to look at all of the labels. Are there any gallery labels, museum labels, any notes or titles from the artist that have been written on? Again, the back can tell us a lot about the condition of the work. Should a painting have been restored, we can see a lot of the evidence of restoration from the back of the canvas. We can also see evidence of water damage, any cracking, any major condition issues. Also looking at the age of the frame, the stretcher, we can look at the wood used for the stretcher, and this can also tell us a lot about the age of the painting. It also helps us a lot in terms of identifying fakes. Obviously, if the back of a canvas or the stretcher is too new, you would know it's not a work from the early 1930s, for example. So these are all the elements that we look at when looking at valuing a piece of art. To give you a very basic example of how a price is established, it is mostly done based off of auction precedents. So we would look at what the current market for an artwork is, or for an artist, and then we track the values from there using a range of databases. The work on the screen now is a work by Sam Klingetwa, who's a South African artist, and this is known as a 13-color lithograph. So it's a print. It's done through a printing process and done through a printing press, and because it's a print, you can have an edition. So this comes from an edition of 50, which means there are 50 artworks of this out there, and each one of them are editions. So this would be number 13 of 50. The work would be signed and dated by the artist. It would be titled. And then what we basically do, if this work comes in, it's quite a clear-cut case. We know the artwork. We know this series of work very well. We can then compare it to other works that have sold, other works from the series of works, and we can see that vaguely the range in which they sell for, and you must know that once it goes onto auction, the selling price is really determined by the buyers. You can then see that they range from around 18,000 to 24,000. And so for an auction, we would put an auction estimate. So that auction estimate would be 18 to 24,000. When insuring the artwork, we would then say the insurance value should be the mid estimate. So that would make it 20,000 Rand. Now that is a very, what we'd call a market related value. And that I think is the most, the main value to go for when insuring an artwork. But obviously once an artwork goes onto the open market, it can go much higher. So it is always important to use rather the middle range to place the insurance value. Just to give you a bit of a story of maybe you might have seen this in the newspapers recently, but this is a work by Irma Stern titled Children Reading the Quran. It made headlines in March this year for selling for 22 million Rand, and that is a new record for the artist. Irma Stern was born in 1895. She was the most prominent painter both in her lifetime and after her lifetime. She was born in South Africa, but she studied in Germany, and she traveled between South Africa and Europe quite frequently. But when the Second World War broke out, she stopped traveling to Europe. She was born from her parents were both German and Jewish. So when the war broke out, she was very disheartened. She didn't want to return to Germany. She wanted nothing to do with Germany, nothing to do with Europe. She even divorced her German husband, which I don't think had anything to do with the war, but it just so happened to happen at the same time. She then decided after the war broke out that she was done with Europe, and she went to go travel Africa. To put in perspective, this is a woman who was recently divorced in the 1930s from South Africa and decided to by herself travel up Africa solo, no companions, just by herself. And in 1939, she went to Zanzibar. She was very interested in Zanzibar for a number of reasons, one of which was the connections between the Cape Town Muslim population and tracing their ancestry back to East Africa. This work was done during her first trip to Zanzibar in 1939, where she basically spent time in Zanzibar, and she ended up going to an Islamic school. And she took a couple study drawings, and one of which of the paintings that came out of this was this painting of the children reading the Quran. She came back in 1940 and had an exhibition in Cape Town, which displayed all of these paintings. When valuing this work, when this work came through to our office and we decided to put a value on it, we had to look at basically all of the aspects as mentioned before. So it's an oil and canvas. We looked at the size of the work. Now this would be an example of having a significant frame. This frame is known as the Zanzibarian frame. The frame was made from carvers in the wood in Zanzibar, and she had exported these frames back to South Africa to frame her paintings. So it was quite a significant work. We put a pre-sale estimate of 10 million to 11 million, advertised the work, and then it went on sale in Cape Town in March 2023. A bit of the history of the sale of the work was it was first exhibited in 1940 in Cape Town, and it was sold for 45 guineas, which was the equivalent to 7,200 pounds back in 1940. So it was still expensive even then. It was bought by a collector named Lillian Isaacson, who was a well-known interwar personality and an art collector. It stayed in her collection, and then it went on auction in Sotheby's, Seventh Valse, in association with Sotheby's in Johannesburg in 1999. And we were able to pull those records. And in 1999, the work sold for 600,000 Rand at the auction. With today's inflation rate, it would have been at the time 2.1 million, but it sold for 600,000 in 1999. And then it came into our sale room in March this year, and through competitive bidding, made 22,300,000. I think it's also important to note that in South Africa, there's actually no capital gains tax on art. So you don't get charged any capital gains tax if you're selling in your personal capacity, which makes art quite desirable to invest in. This is an example of an artist who has continuously developed and grown. Her market has stayed very constant. This made a world record. Majority of her paintings don't sell for this level of 22 million, but they do sell depending on the range of art. She does have prints and watercolors that can sell from 10,000 up to 100,000. She's got less important oil paintings that can sell for 1 to 2 million Rand, and the more significant important paintings from what we would call the golden eras, those would sell for around 10 to 15,000. And this work, we were happy, made a new record in March 2023. To show an example of a work that of how an investment in art can, in a way, go wrong. It's an example by Zeletu Mtetwa. He is a Johannesburg artist. He was born in 1960, and he graduated from Kayla's Art School in Cape Town. He had sort of a fast track to fame. He then signed with a major gallery in Johannesburg, and his art was quite widely exhibited. During his career in the early 2000s, he did very well for himself, so well that he bought himself a Porsche with very unique set of black rims on it. And why this is significant is that in 2014, the artist, now you must know, before 2014, he was very successful. He was on the road to fame. Everyone wanted his artwork. He was producing artwork. He basically wasn't producing enough artwork for the demand, in a way. And in 2014, he then got charged with murder. Zeletu had brutally kicked and hit a sex worker to death on the streets of Woodstock in Cape Town. And how he was found out was because his fancy Porsche with very unique black rims was caught on the CCTV. The court case went on for about 4 years, and then he got convicted with murder, or officially charged with murder in 2016, and he's currently still serving his sentence. From the time that case hit the news, all his work basically lost value, all of it. His work couldn't be sold. At the time in 2016, we actually had, while the case was still going on and he wasn't yet convicted, we had a work in our Cape Town auction coming up for sale, and we had protesters, sex workers protesting outside our office. Basically, none of his work could from that point onwards be sold on any open market. And in this way, this shows an example of how an artist's work can completely lose value from being really sought after, high demand. There is always that risk that you can lose all your value, and this is an example of how. Other ways in which you would lose value in art would be from forgeries. If an artist's work starts getting faked, forgeries, if there's questions around it, then work can start losing value. So here you've got an example of Irma Stern, who's sort of the top leading artist who continuously has a high market, high demand, and then you've got an example also of an artist who can ruin their market so quickly. And in between these two artists, there are thousands of other artists and thousands of different markets to watch. Some tips if you're looking at buying art is always do your research. Do your research in terms of the artists you're interested in, the type of work you're interested in, the themes, the mediums. Always ask for advice. Auctioneers often give free advice. We are also consultants. We love to talk about art, and you'll see a lot of people in the art industry are always there to give advice. Also, if you're buying for investment, buy for long term. As you can see with the Irma Stern, going from selling in 1940 for 7,200 pounds, in 1999 it then sold for 600,000 rand, and then this year to be selling for 22 million rand. You can see it's really a long-term game. And lastly, always buy what you like. Tips for insuring your art collection. It's part of it's particularly one of my roles. It's part of my job to do valuations for art collections. We value it, like I said, based on market-related values, and we use the mid-estimate, and that is the most accurate estimate to give for insuring your art. Art doesn't appreciate sort of statically for sort of 10% every year. It does depend every artwork and every artist. Their market varies every year. While some artists gain traction, other artists sometimes lose traction. Artworks sometimes go out of trend. They can be less popular. If bad news comes out about an artist, that could also affect their market. But also at the same time, other artist market can rapidly increase in value. So it is important to regularly get your art valued. So either annually or every 2 or 5 years to get your entire art collection valued, and then resubmit that to your insurer so you always have an accurate valuation. I'll see if there's any questions, because I think there is a little bit of time left. But if you have any questions or want to reach out, there is my email address and the Strauss&Co website, where you can basically see everything we do. You can see all the artwork that we sell for. On our website, we have every artwork that we've ever sold. It is publicly available. All our prices are publicly available. And I see there's a question, what are the costs of getting paintings valued? So for Strauss & Company, it's actually a service we offer obligation free. So we do valuations for free. There's on our website, you'll see there's a valuations tab where you can submit your artwork to us. We'll get an email with all the information of your artwork, and we'll give you a value, provided it is something that we can value. And the reason why we do this for free is because we are very passionate about the fact that people need to know about the value of your work. You can easily get scammed. You can easily, we often get stories of people coming and believing their whole lives that their artwork is worth R1 million, when actually it's a print or it's decorative. In other cases, we very rarely get the case where somebody comes in with a work that they thought had no value, but actually does have a lot of value. So we are always open, like I said, to give our advice, to value artworks. You can either bring your pieces into our office, send me an email, or like I said, on our website, you can submit your valuation request. I don't know if there's any other questions. Yeah, it's mainly just the cost. So if anything, feel free to reach out. Thank you.
The CN&CO team does this InsureTalk event each month. We have more than 3,000 people attending from all around the industry, and mostly from executive and senior leadership positions. We have one event that is still available for a mainline head sponsor opportunity, and it gives you a lot of wonderful opportunities to showcase the talent in your business. So please reach out to us. We would love to find an event partner to fill that one slot still, and use the opportunity to show the people in your business to the rest of the industry, and tell us about what you do, and share your knowledge and experience with us through being a headline sponsor event partner of InsureTalk. So if you want to know more about that, you can reach out to Llewellyn and the team, and I'll give you more information. The other thing that I wanted to mention is we've reached the end of our CPD cycle. I was busy uploading all my certificates the other day, and I know that there are still some individuals out there who need some points. You've heard some comments about that through the day today. Please remember that if you attend the InsureTalk events each month, you get your CPD points, and it gets sent to you. You can go to the InsureTalk website, the portal. Llewellyn mentioned that as well, where you can go and find your CPD certificates and keep all your information in one place. So it's very important that you join us. And on this point, we can accommodate thousands of people. Ask your staff, your people who work in your organization. My entire Amit team is on InsureTalk every month. Let them join in the conversation and be inspired and learn about what's happening in the industry and parts of the industry that they may be not involved in. So make sure that everyone joins us. It's free. The event sponsors make sure that it stays free, and the team here at CN&CO makes sure that you have an excellent event to attend. So on that note, I'm going to say over and out. I'll see you next month for the next session. Thank you so much for joining us today.